All right. Hello, everybody. Welcome back to another episode of The Market Close. It is Wednesday, April 15th, and it looks like the momentum in this market is not only continuing, it is demolishing previous stretches that we have had of green. We are not only currently right now at our own at the best stretch since 2009, we are getting ready to have one of the best stretches in the past 25 years, going all the way back down to 2000, if this excitement continues, and it looks like it is. Nvidia touched 200 very slowly today for a little bit. Took a long time to get there, got to 200.4, then got rejected. Right now, 198. Can't be too mad. S&P 500 did touch 7,000. We're right now at 69.70, 699.70. Hopefully we get above that 7,000 level in the next 12 minutes to close. But I mean, look across the board. Tesla, almost 400. Robinhood, back-to-back days of 10%. Zeta, which was getting ready to go below 14, back at 17.45. You got Palantir, which it just felt good to buy the dip on this one and be rewarded. And I think a lot of us bought the dip with conviction, given how much we've been studying this company for the past 5 years. Palantir really has not given you many dips over the past 2 years, and it gave us one last week, 120 to 142. That's up 5% on the day. AMD 256, MasterCard's up 2%. Microsoft is up 5% on the day. CoreWeave 119, they got that $1 billion investment by Jane Street today. SoFi almost $19. Salesforce 4%. It's been a while since all the software names got some love. They're getting it today. IGV, that's up 4.6. Salesforce 4%. Oracle 170. Nike's up 3%. Your quantum names absolutely killing it. D-Wave is up 20% on the day. IONQ is up 19% on the day. Rigetti is up 12%. I mean, everywhere you go, you're seeing some green. It's kind of hard to look across this market and not see some green. And there's some stocks that maybe the earnings weren't the best, or maybe the expectations weren't too strong, or they just simply had too much of a run, like a SanDisk taking a 5% haircut, a Micron taking a 3% haircut, and ASML guidance wasn't the best. But overall, I mean, what a day. What a freaking day for the stock market. We got a lot to analyze in terms of discussing how this day has been playing out. But nonetheless, I think based on this momentum today, it's important to say that we are not just green, we are greeny green. S&P goes greeny green, greeny green. One of those days. And also shout out to Patrick, because he gave me this clip. You guys are great with these clips. We got a new one, folks. We got a new one. I think today was a pretty bullish day. I think that's bullish. Again, I'm telling you, the falsetto, it really deserves a record deal. I really do think there's an opportunity here. I think there is an opportunity here. S&P, 699.77. All right, put in the chat what you did today. Bought, sold, covered calls, puts. Are you getting scared, nervous, excited? If you haven't deployed capital, are you deploying more capital? Nebius right there, by the way, all-time highs, 165.56. You're seeing a lot of names that took a dip in the morning, getting more of a rebound. Also, we got to talk about this bird story. 1930, up 673% on the day. I don't know what to say about this. I know some of you guys traded it. Let me know in the chat if you made some money off it. Obviously, if you put in a decent chunk of money, you could have made some generational wealth in the past couple of hours. I did a little bit more digging on what actually happened today with this stock. And apparently there's a deeper story here in the context of what they're doing. So the 50 million convertible financing that they raised today is not only going to be important for them to pivot from being a shoe company, it is going to allow them to create AI compute infrastructure. And they are pivoting the company name, I didn't know this, I found out an hour ago, to Newbird AI. Newbird AI. So you've got a legit pivot. Now, how legit is the company? I have no idea. If you take a look at the stock price all time, it is still down. Google is saying 100%, but basically 95%. It's down 95% all time. So the little run that you're seeing right here is, I mean, it's only because of the momentum we've had today. But this thing was trading at $420 when you get rid of all the splits back in August of 2021. So the fact that it's down from 420, but it's up 8x today, I mean, if you bought at 420, it doesn't make a difference. If you bought at $4 this morning, it does make a difference. And so is this bullish? Is this bearish? I mean, I definitely don't think it's the most exciting thing to see a random SPAC pump and dump turn into a GPU AI infrastructure play. But to give one potential bullish perspective, if the demand for AI is unlimited and this company legitimately starts raising real capital, gets investors interested, and actually can offer GPUs as a service, which, why wouldn't you go to CoreWeave or Nebius or all these other better players? It's a stretch, but there is a way to make sense of it. I don't know if that valuation makes sense, but the pivot itself, I don't think the pivot is crazy. All the Bitcoin miners pivoted. So it's not crazy for the pivot. The question is just, is this valuation making sense given they have 50 million of GPUs and 0 contracts or hyperscaler deals or anything like that? It's quite incredible to see. You don't see that in a bear market. It looks like we are getting back to a more bullish market for stuff like that to happen. Amazon right there, 249. CoreWeave at 119. You got Poet, that's up 2.6%. Xandu XNDU, that's another quantum name. I did not know that was up 72%. I'm literally seeing that for the first time, but there you go. Your quantum names are really squeezing. Iran, look at that. It was basically flat all day. 48.67, very nice to see Iran getting a little bit more momentum. HIMS as well. That one made a move, 2402. That's up 12%. So HIMS finally breaking out. BMNR finally breaking out as well. S&P, yes, we did hit 7,000 earlier in the day. That is a new all-time high. Hopefully we can stay above it. Hopefully we can get the close. We got 7 minutes, 40 cents to get that close. Nvidia 200 on the close would be nice, but S&P 7,000 would be very, very nice. I mean, it's just overall a great day. It's overall a great day. I see a lot of people saying I either closed my covered calls, rolled them. Seeing some people say I sold covered calls on Palantir, bought Rubrik, bought some Lights, bought some Rocket Lab, Grab very close to $4, $3.92. That's trying to get there as well. Loaded dips on Vertiv, Light, and Corning. A lot of these AI infrastructure names, some of them down because they've had such a big run even through the midst of the war. But if your stock wasn't running during the war and there is something fundamental associated with it, today is when it's getting that run. I mean, DoorDash, they had one of the best earnings they've ever had in history, but it was in the middle of the war. And so it was a muted reaction, up 10%. Up 10%, which is not too crazy. Someone said, I bought puts on Nebius and I rent. Look, buying puts here is not a horrible idea either. Just getting some protection. Again, it's a question of how comfortable your risk tolerance is with the nature of the rally that we've seen. I think based on all the headlines that we've been analyzing over the past couple of days, it's not that easy for this to go away. Could it pull back a little bit? Sure. But I don't know if, Bloom Energy, if you buy puts when it's 230 and it goes to 213 is that big of a deal. When you're buying puts, you're looking for it to really come down or you're looking for protection. And put premiums are lower because stocks are up. Question is, are they worth buying even if you see these stocks getting some more excitement? Look at the Goobs, almost at 340. Almost at 340. Broadcom almost at 400. I mean, again, these were levels that these stocks were well above back in September, October, and then for the past 7 months they haven't been able to even get close to it. And now we're seeing that. Schwab at $100 a share, Ondas almost at $10 again. GitLab, they announced a partnership with Google yesterday. That's why that's getting some more momentum. Nebius 167. This one is just not slowing down in any meaningful way. You're seeing more and more excitement right there. And then you got Nebius, which continues to be green. Melanie says it's a fun day to be a retail investor. It absolutely is a fun day to be a retail investor. It's one of those days that we haven't had in a long time. It's one of those weeks that we haven't had in a long time. And I think that's why you're seeing so many people relish in the fact that we're getting a little bit more of a bull market. Goldman Sachs pumped all the neoclouds today. They put out a note in their research divisions. They said companies are overrunning their initial budgets for inference by orders of magnitude. We heard one industry data point on inference costs in engineering now approaching about 10% of their headcount costs, but could be on track to be on par with headcount costs in the next several quarters based on current trajectories. So when you have corporations that are spending as much on inference, aka compute, as 10% of labor, I mean, yeah, you're going to need a lot of players to help you facilitate that. Your CoreWeaves, your Nebiuses, your Irens, your Ciphers, your TeraWulfs, your Nvidias, obviously, AMDs, Broadcoms, all of them come together. And that's where you get the rally that I think we're getting right here, along with the peace deal that hopefully will be negotiated. S&P 700. We got 4 days, not 4 days, 4 minutes until we hopefully get a close today for 7,000. There it is. That looks beautiful. Trump's going to be excited about that today. In terms of updates on the war, by the way, Sam's going to be on the show in about 15 minutes. We will have Anna Panaman, who is the ASTS OG space mob guy. He'll be on at 5 p.m. And so we'll have 2 guests on the show today, get their perspectives on the market. But, I mean, Trump definitely does not want this thing to go down. He's been fighting really hard over the past month, dealing with a lot of volatility in the economy. He's getting a breather right here based on the idea of a ceasefire and a potential negotiation. If that goes away and the market goes back down, I just don't think he's going to want that. And so I think he would be incentivized as well to keep up the green. Jensen, by the way, did a new interview. We'll listen to a couple clips of that. Besant also was with Carolyn Levitt, the White House press secretary. We have a bunch of clips of that, and we will see what Besant said today. The overall update on the Iran war, Trump gave a couple quotes to reporters, and basically he said, we did not ask for a ceasefire extension, and we are progressing on potentially trying to get a deal. Iran said we have no final agreement that has been reached yet. But obviously, if they get to negotiating, that'll be a good thing for them. Iran also, this is from Tehran State News, Iran could consider ships being able to sail through the Oman side of the Strait of Hormuz without inference or attack as a part of the deal with the U.S., and Iran will maintain control over its waters in the Strait of Hormuz, and Oman will decide what to do on their side of the waterway. So again, you're just seeing more updates on better negotiations that are taking place, which I think are more important than not. And that's good, because you need to see more negotiations and more progress on those negotiations for us to keep getting a chance to hold on to our green. Robinhood right there, 10.3%. We got about a minute and a half until this market closes. BMNR, that's up 3.6. This is going to be one of those bells today, folks. This is one of those days where you cannot mute. Today is not a day to mute. It's not a day, even if you don't like it. It's not a freaking day to mute the bell. Back-to-back 10 days on Hood. Yeah, I mean, that already is a prime example of some of the market wanting to turn more bullish. Okay, here we go. Let's see. 30 seconds. 30 seconds. Can we get 7,000? Can we get 7,000? Here it is, 700.2. I don't know if we're going to get 200 on Nvidia, unfortunately. Nvidia 199, probably not 200, but this will be the first ever close. 20 seconds remain. Let's see if we can make it happen. Let's see. Big day. This is real money being added to a lot of people's accounts and their portfolios for having conviction. They're going to take it away from us in the last 5 seconds. Really? Last 5 seconds, they're going to take it away from us. It's all right. That's okay. There you go. 4 p.m., 699.89 is the close. We'll get it back eventually, but there we go. S&P 500, all-time highs. You know there's some market maker who's watching the stream right now, some guy from Jane Street or Citadel, and he's like, we will not let retail be that happy. Okay, we already gave them a 10% run from the bottom. We're not going to let retail be as happy as they are trying to be. But that's okay. 699.89 on the S&P 500. That is what we have, and it's very excited to see. Very excited to see up 0.78%. This is the best 12-day stretch we've had since 2009, and it looks like it's probably going to be going back even further based on the way we ended today. HIMS was up 14% on the day. Grab was up 2.62%. IONQ up 20.9%. The SPX itself ended at 7,000. So I guess you could say we did end at 7,000. SPY ended just below 700. SPX index, though, the actual index, not the ETF version of it, did end above 7,000. So, most of retail buys SPY, not SPX, but still nice to see it getting that momentum. IREN, 48.82. OSS, great day. They put out some more earnings guidance, 12.2%, and that was green. Bank of America was up 1.81%. IGV was up 4%. Oracle was up 4%. Reddit was up 2.5%. Rocket Lab was up 1.9%. Adobe was up 3.79%. GameStop, 3% of the day. EOSE had a great day, up 12%. It was up 10% yesterday as well. Marvell was up 1%. Schwab was up 1.94%. Even Webull had a great day as well. Webull, look at that, 11% based on that pattern day trading rule that got reversed, which was great for Robinhood. Zeta, 7.2, 14 to 17. Robinhood, 60 to 87 essentially over the past week. Allbirds ended at 16.99. Still moving after hours. That's up 580%. It's up 580%. Nebius closed at an all-time high, 166. I mean, it's bullish. Nvidia, 198.87. S&P 500 index closed exactly at 7,022.95. Figma, great day, 10%. That was supposed to be dead because of Anthropic's new design model. Looks like the street forgot about that. Archer got back above $6. Reddit again, 2.54%. Palantir, what an epic reversal from the absolute lows at 120, 142, 4.75% on the day. I mean, everywhere you look, there is something that the market was excited about. Even Apple, look at that. Apple was 249 a couple days ago. It was at 252 yesterday, 266. 3% day on a basically $4 trillion company, 3.91 trillion, and Nvidia is at 4.88 trillion today. As that continues to get momentum. Orbs, this was up as well, 25%. OpenAI exposure, probably helping this general bull market excitement, crypto going up. Where did BTC go? Okay, so we didn't touch 76 yet, 74.8. We did get to 75.3, didn't get above 76, but it's not bad. SoFi, 1882. After hours. Fear and greed, we are at, and then we'll get into all the different headlines that we had today. We are at officially greed, folks. We were very close in the morning, and it makes sense that we are back. Obviously, Allbirds going up at the level it went up. I mean, yeah, it feels kind of greedy. You can't argue that. But if this is a coiled up spring and we aren't really going to potentially see a lot of downside until we get to extreme greed, we probably have some more room to go. 7,000 gets us greed, though. It's interesting because 630 had us at extreme fear, so it is a rally, 630 to 7,000. I guess the question is, how much do we have to go in the midst of this? Now, the fundamental question I think a lot of people are asking are, have we topped out here? And it's impossible to answer that question, but I, once again, will look to earnings growth. And earnings growth, we will find out over the coming weeks. So far, we already had really good earnings by the banks, ASML, J&J, some of the pharmaceutical companies. We will get TSM tonight and then Netflix tomorrow. If earnings continue to do well, I mean, the macro is the macro, but if that's what stocks are judged on, then some of these multiples are still pretty cheap. I mean, even after Micron's run from 318 to 460, their forward PE is 7. So it's not like, now I get it, memory cyclical. I get, there's a reason why it went to 318, but still, it's not like Micron's trading at a 50 PE as a cyclical memory company, which would feel a little aggressive. It's not there. And that makes me feel a bit more confident that this market has more room to run. Nvidia right there, 198.87, which is what we have right now in the after hours. All right, so let's talk about the headlines we had today. Sam will be on a little bit. We'll get his thoughts on some of these different stocks, software, and what else is going on. But again, congrats to everybody. It's been a hell of a past 2 months. It has not been fun, obviously, waking up every day and all of us having to deal with the intensity of just how annoying this stock market has been. Not bull market, not bear market, but stock market, right? We were kind of stuck in the middle, back and forth, given the earnings momentum, but the macro headwind of the war kind of holding it back. It was tough. It's emotional. And, there's many days I'm sure people just felt horrible. But you kind of go through those days to get on the other side. And we are definitely on the other side. And now the question is, how big can we go? Microsoft, 411. Microsoft is back to being a $3 trillion company. They took Microsoft down, and now we are here at 3 trillion. The HIMS CEO just put out a tweet. Is that why that stock's moving after hours? HIMS up 2%. What did he say? Andrew Dudum. The FDA move towards bringing regulatory clarity on peptide therapy at HIMSS. We believe in the longevity of care must be guided by safety, transparency, and clinical excellence. Okay, so the peptide news, I guess, HIMSS is going to pivot to data centers. Okay, so I guess it's the peptide news. But that was kind of earlier in the day. I don't know why it's still moving after hours unless the street's just really excited about that. But there you go. A little bit more of attention on, they loosened peptide restrictions. Okay. So that seems to be why. See, there's news that's coming across all these different sectors, whether it's Robinhood, pattern day trading, whether it's HIMSS, getting more loose on restrictions for peptides. I mean, you're seeing a bunch of things. Jane Street investing $1 billion into CoreWeave. Now these headlines can be actually adopted in a way that makes them, get some momentum, because the fog of the war is just not that aggressive. HIM's right there, 3% after a 14% move after hours. That one is moving hard. Yeah, a lot of people joke that Nike should just turn into an AI play. I mean, it sounds ridiculous, but it's also like, theoretically, if Nike wants to do that. Now, granted, I don't think they should do that, but like, it's just, you imagine what the stock would do. Birds, by the way, down 14% after hours. Again, this is a game of musical chairs. It got to 24 at some point. You might have some people buying the dip. 277 million shares were traded today. This one is going to be extremely volatile. Whoever bought it at 24, probably a little upset, but even if you bought it at 10, maybe you're not that upset given the move that it'd make. Again, S&P 500, we closed at 7,000. Closed at 7,000. One thing about the bird stuff that's really scary is, back in 2021, there were a lot of companies that were going bankrupt and they legit pivoted to Web3 crypto companies and like crypto treasuries, crypto this, crypto that. That was in October. We topped out in November. So, I mean, it is a little scary sometimes when you see this sector and some random no-name company that's down 99% says, let's just pivot to that sector, and then boom, the stock goes up. But I also think that company could go to absolute zero. And if we don't see a trend of that happening, the actual core demand for compute is different than the demand for Web3 crypto projects. And that is what the differentiator is for why, whether Allbirds fails or not, it might not be a top given, this demand is very, very real. Jensen, all right, so we're going to look at Bascent and a couple other clips and some different headlines. By the way, Amazon just said they're going to be reporting on April 29th. So we will get Amazon's earnings in a couple of weeks. But here is what Jensen said in a new interview today, a couple good clips from him. Once again, making the argument that Nvidia is the best way to play the AI cycle.
Nvidia's computing stack is the best performance per TCO in the world, bar none. Nobody can demonstrate to me that any single platform in the world today has better performance TCO ratio. Not one company. And in fact, the benchmarks are out there. Dylan's, right? Inference Max is sitting out there for everybody to use. And not one TPU won't come, Trainium won't come. I encourage them to use Inference Max and demonstrate their incredible inference cost. It's really, really hard. Nobody wants to show up. MLPerf, I would welcome Trainium to demonstrate their 40% that they claim all the time. I would love to hear them demonstrate the cost advantage of TPUs. It makes no sense in my mind. It makes absolutely zero sense. On first principles, it makes no sense. And so I think the reason why we're so successful is simply because our TCO is so great.
Let me just ask you a different question, which is, if all these things are true about price performance and performance per watt, et cetera, are true, why do you think it is the case that Anthropic, for example, just announced a couple days ago they have a multi-gigawatt deal with Broadcom and Google for TPUs and majority of their compute? Obviously for Google, it's TPUs are majority of compute. So if I look at these big AI companies, there was some point where it was all NVIDIA, and now it's not. So I'm curious how to square, if these things are true on paper, why are they going with other accelerators?
Yeah. Anthropic is a unique instance.
This is an important question because he's actually pushing him on why people aren't just buying GPUs, why they're buying ASICs.
And not a trend. Without Anthropic, why would there be any TPU growth at all? It's 100% Anthropic. Without Anthropic, why would there be any Trainium growth at all? It's 100% Anthropic. I think that's fairly well known and well understood. It's not that there's an abundance of ASIC opportunities. There's only one Anthropic.
But OpenAI deals with AMD. They're building their own Titan accelerator.
Yeah, but they're mostly, I think we could all acknowledge they're vastly NVIDIA. And we're going to still do a lot of work together. Yeah. I'm not offended by other people using something else and trying things. If they don't try these other things, how would they know how good ours is? And sometimes you got to be reminded of it. And we have to continuously earn the position that we're in.
So I thought that was a good acknowledgement of Jensen for the first time, kind of talking about all the other different ASICs that are out there and, why NVIDIA still continues to be the winner and why they're getting more and more momentum. And that's a good thing because he's not shying away from the conversation or shying away from the discussion, but rather he's saying, look, at the end of the day, they're going to keep using NVIDIA. And although there are different levels to how people are embracing the compute stack, the majority of it goes back to NVIDIA, which is the most important thing in the world. That's also very important because all these derivative companies, your Nebuses, your CoreWeaves, they need to make sure your Coherence, Lumentums, et cetera, they need NVIDIA to keep winning in order for them to keep winning as well. Frogger Finn says, hi, Amit. Can you say hi to my 8-year-old son? He watched the market open. Hello to the 8-year-old son of Frogger Finn. Thank you for watching the market open with your pops, and I appreciate you being here and being part of the show. Also, you're 8 years old and learning about the market. You will be very, very rich one day, because at 8 years old, I was not learning about the markets, but you are. So that is going to help out. Damashi, thank you for the 5 gifted memberships. Appreciate that. Thank you for giving Goldfish, It's Rach 404, Quantes, Two Wheel Crypto, and BG Gomez 3435 a gifted membership. Deeply appreciate that. And thank you for spreading around the love. Okay, what did Basent say today? Because he said a couple things that I think were also really interesting in regards to the current state of the economy. First off, tariff refunds. Here's what he had to say about that.
So that's the amount who have already requested refunds. So they are already in the chute, and we'll see what the timeline is for that.
Will that affect the U.S. economy, all of those refunds coming out of the U.S. Treasury?
We'll have to see what comes out, and we'll have to see what the companies do with them. Just to be clear, thanks to the Supreme Court, some of this money is going back to China. So is that going to affect the U.S. economy? I don't know.
So Basent essentially making the claim that because of the Supreme Court, the tariff refunds are going to be interpreted in a different way. And ultimately, I don't know how much of an impact it has on the markets at the moment, but that is something to watch out for given how many of those refunds go. And then this is what he said about sanctions relief in regards to oil.
My question is, are you considering any more sanctions relief, Mr. Secretary, for countries that are suffering right now in order to get more oil to your allies?
We will not be renewing the general license on Russian oil, and we will not be renewing the general license on Iranian oil. Because again, that was oil that was on the water prior to March 11th. Right. So all that has been used.
Thank you. My question.
If we end the war soon, we're not going to have to worry about that. But as of now, sanctions around oil is the big question in order to get supply down. By the way, oil, we got to 91 at the close, 91, which is a hell of a lot better than 107, which is where we were at earlier. And then finally, this is what Basent said about Kevin Warsh, who will be being confirmed soon as the next Fed chair.
Yeah, thanks, Caroline. I appreciate it. So I want to cover 2 topics, if I could, the tax day, but also the confirmation. So the confirmation hearing set for next week for Kevin Warsh, but Senator Tom Tillis is still a no, and he's holding firm on that. How are you going to win over Senator Tillis to get this confirmation out of committee?
Boy, I'm sure Senator Tillis wants to do the best thing for the Federal Reserve, for the American people. He has publicly said that Kevin Warsh is a great candidate for the chair. So let's get to the hearings and see where we are then.
I want to ask you about tax day. Yeah, thanks, Caroline. I appreciate it.
So that's what we got from Basent today. Wasn't anything too crazy, but kind of an update on kind of the current state of the economy. Now, one thing about Kevin Warsh is this guy's loaded. This guy apparently is worth about $270 million, and he's invested in pretty much every single startup that you can think of. So, and it makes sense. He has a relationship with Stanley Druckenmiller, but his net worth is pretty high up there. And, he is going to be one of the ones who's going to be investing. The interesting thing about his investment portfolio, when you really take a look at it, is that, yes, his wife is also loaded as well. He's invested in a lot of crypto shit, like a lot. So total assets, 131 to 209 million, 69-page financial disclosure. I'll link this tweet right here if people want to see exactly what he's in. But he's in a lot of AI companies, a lot of startups, and a ton of crypto stuff. I mean, it's kind of nice to know that the guy who's in charge of monetary policy is, it's going to be someone who deeply cares about crypto. I mean, he's personally, financially invested in these asset classes. So as a result of him caring about crypto, maybe you see that as a tailwind. Obviously, rate cuts would be good for crypto, but overall policy and the regulatory frameworks he does with the Digital Assets Committee, you might have some sway from the Fed chair if he starts to care more about crypto. Tom Lee was on earlier today as well. Here is what he said about the state of these markets.
The war is actually stimulating the economy. And the third is, I know I've talked before about inflation shocks, but we've been looking back at the history of oil spikes, and the impact on core is less than we thought. So I think there may be less of an inflation shock coming. So I think stocks can go back to that 7,300, which is our base case for the for this year in our three-phase market before we might see a larger drawdown.
Well, I hear you essentially saying that the U.S., in some respects, as a result of this war, is the best house in a now more uncertain neighborhood.
That's right. This is the seventh black swan now thrown on investors since 2020. And now we've seen that the U.S. can handle a Middle East catastrophe, one where the strait is closed and oil's not available. The U.S. economy is still operating while other countries are talking about shutdowns and factories closing.
You don't feel in any way, or you're not concerned that you may be complacent to the risks that are still out there because of the war?
There are tail risks. I think that the size of the tail has shrunk, tail meaning a downside risk. And I do think that there's a lot of folks who are credibly pointing out that the shock could still hit the shore in the U.S. because of things like helium and other commodities. So we are watching that, Scott, but I'd also say that we could have a positive tail risk, which is if we can find a lasting ceasefire, then whatever shock hits the shores is so short in effect that it won't hurt our base case.
The NASDAQ is trying for its 11th straight positive day. It'd be the longest streak since November of 2021. There are those who believe, like JP Morgan does, that if the next leg of the rally is going to be strong, tech is going to have to lead. Do you agree with that call?
Yeah, we do. I think that it's still useful for people to look at what has outperformed since the war started. And, number one has been Ethereum and Bitcoin, which are crypto, but they're highly correlated to tech.
He is right about that. Ethereum and Bitcoin have outperformed pretty much everything since the start of the war.
Of course, there's energy stocks, but then it's led by tech, the Mag 7, and even the software. So I think that JP Morgan's correct. I think tech is growth when people are worried about growth. And of course, it's also been the most under-owned group because that's the group people were selling.
Well, part of the call is that you're going to get the best earnings growth from tech. There are more notes about that today, while at the same time, valuations have fallen. So these stocks in some people's eyes aren't as pricey as they used to be and look even more attractive because earnings growth estimates are solid, if not increasing.
That sounds right, Scott. These companies have true moats. They've grown earnings consistently faster than the S&P. I think they're going to be one of the winners around AI. And you're right, to buy them at a market multiple means that 5 years from now, I think people are going to be surprised that they could buy them so cheaply.
It's getting harder because the stocks have rallied back so hard. Like you see Meta and Broadcom, and I'll come back to you in a minute.
And there is an argument that it is getting harder because these stocks have rallied so hard, but it's getting harder because of sentiment and the ability to be okay with buying a stock that's up 30%, not valuation. And I think that's the difference that Tom is talking about, which is fair because a lot of these Mag 7s you would still imagine are relatively cheap compared to their earnings growth. Now, to kind of make the case that the bull market could be back, take a look at this stat. U.S. call option volumes have surged to over 47 million a day. This was yesterday. The second highest reading this year. I can't imagine what it was today. Call volume is up 75% since the beginning of the month, and put option volume, which we saw that put volumes were the highest in the middle of March, have now declined to 32 million contracts a day by about 15%. By comparison, fewer than 500,000 contracts traded for the index at the beginning of April. Risk appetite is coming back. It's just that simple. It's coming back. Another way to prove risk appetite is coming back. Good old Robinhood had the highest volume traded today since September 19th, 2025, the day before they got into the S&P 500. And if that volume is coming to an asset like Hood, which again is a proxy for the bull market, about 70 million shares today were traded. Their average volume is 30 million shares, so more than double the average volume. Momentum's coming back. And if momentum is coming back, the hard part is buying into momentum if you feel you missed it because you're waiting for it to give you a pullback. But if that pullback doesn't come back, sometimes it's better to just get back in. Oh my goodness. No one is ready for this story. But let me report it quickly because it just came out. MYSE is up right now after hours 129%. This is a 7 million market cap company because they are rebranding as myseum.ai. to align with a full suite of technology and social media platforms. There's no way this is happening, dude. There's like actually no way that this is. Did they see the playbook by Allbirds today and just there's no way it's happening twice. Volume was 3 million and it's rising. Average volume is 58,000 on this. What does this company do? Sam, we'll get you on in a second. Let me just pull this up. What does this Myseum AI? MYS. Has anyone ever heard of this before? MYSE. 8 minutes ago. 8 minutes ago, this rebrand. You know, a lot of people are going to buy this thinking it's going to do an Allbirds. A lot of people are just going to YOLO into this, right? You got to be careful. People saw what happened to Allbirds. They might just take a shot on this. Myseum. This can't be happening, bro. Myseum is empowering social media with privacy-first AI. The description on Robinhood says they're a communication software company. Its product, DAT, Chat, Messenger, and Private Social Network, is a mobile application that gives users the ability to communicate with privacy and protection. Okay, so it's Facebook with privacy? Is that what they're saying? What the hell is this? It enables users to hide secret and encrypted messages behind a cover, which messages can only be unlocked by the recipient and which are automatically destroyed after a fixed number of views or fixed. Is it Snapchat? What the fuck is this, bro? Encrypted messages? You mean WhatsApp? Like, its application integrates with iMessage, making private messages potentially available to hundreds of millions of users. It's located in New Brunswick. I went to school in Rutgers. Its headquarters are like 30 minutes from where I went to college. Up 120% after that. This is 6 million. Yeah, the market cap is 6 million. 4 million shares outstanding. I mean, this one theoretically could keep going. Wow. It's funny because I was just making the case to solidify we are back in a more bullish market with the call option stat and with the Robinhood stat, the volume stat. I think this is the biggest stat that's out there, but this might not be a stat that we wanted to see. Sam, what do you think is going on, man?
Dude, we are so back. I mean, I think that's when you see $6 million market cap stocks fly 120% after hours. You see Allbirds pivot from selling shoes and apparel to AI data center. I guess we're back. I guess we are back. I remember Allbirds back in like 2021. Like that stock is like 90% down from all-time highs or something like that. It's, well, maybe not anymore, but it was.
Is this?
I guess we're back.
Is okay. So yes, we're back. But is this scary? This and Allbirds, like, how are you thinking of it?
No, it's not scary. Just common bull market behavior.
Okay, that's fair. And the fact that this is a $6 million company, if it goes to zero, like who the hell cares, right? It's not a big
Could
deal.
be someone in your chat.
Well, maybe, I don't know. But like the weird thing about this is, and the scary part to me is that if a company thinks AI is hot and they embrace AI, they get a bid. We just don't want to see a lot of that without legitimacy because we think AI is so legit, right? But to your point, it's a very small company, so
yeah, for sure.
By the way, guys, Costco just declared its dividend of $147. It's actually increased from $130. So you got a higher Costco dividend that just came out as well. By the way, William Blair put out a note on Allbirds just now, and they said, we are ending our coverage. We think the AI pivot is a Hail Mary strategy. They're selling their footwear business for $39 million. Company is going to be rebranded as Newbird AI. Their enterprise value is $10 million. The current valuation is $140 million. We think this is not worth it, essentially, is what the street's saying here. All right, so let's talk a little bit about what's going on in the market. So we'll talk about software. We'll talk about some stocks you're looking at, Sam. But overall, markets, Iran war, you've been tracking it with me. We were live when the ceasefire news came out. Do you think we bottomed on March 30th, and are we kind of out of the woods in regards to the macro backdrops yet?
It would be very difficult to retrace all the way back to the March lows. Like 10% move down, like there would have to be some sort of catastrophic black swan event for that to happen. We're unraveling. But the surprising part is that we are actually trading higher than we were before this war was even mentioned, at all-time highs, right? So I think really it's really just about sentiment. So sentiment is obviously a lot better than where it was a few months ago, because now there's no more choppiness. We're getting a breakout zone above the all-time highs. And then even Qs are at all-time highs. We haven't made those in a while.
Did they? Did they get?
Yeah, they made. An
Oh
all-time high
wow, we
today.
did. Yeah.
Yeah, we haven't had that since October, or was it October? November was the last all-time high on the Qs, and that was a massive rejection. You ask me, I mean, Qs look like it made a double top back in January, and never actually made an all-time high in January, at least a closing all-time high. And I don't think there's such thing as triple tops. I think that's just momentum moving back up. Triple tops are actually pretty rare, so I don't think that's going to happen. We probably bottomed in March at some event. Even Trump is talking about going back to Cuba, and the market just shrugged it off.
Yeah, I mean, the Cuba headline came out yesterday, and it's almost like no one cared. But this was similar to this is similar to the Lebanon-Israeli attacks, where that was after the ceasefire, and the market still didn't care. So, do you think the market is, I guess, fully priced in the Iran war at this point?
I think they have. I think they're also pricing in not the ceasefire, but the deal itself, which is weird because every single positive headline you see from it, the market starts to edge a little bit higher. So maybe they haven't fully priced the end of the war in, but honestly, the time that the bears could have came in was last Sunday, but that got bought up very hard. And you would think the blockade would have been pretty bearish, but as you continue to think about it, Iran and the U.S. continue to talk to each other. Like there's no more like we are not talking to the U.S. The U.S. makes stuff up. Now it's like they are coming up with a deal right now, and they're supposed to meet again this weekend.
Yeah, and the fact that they're getting ready to meet again, and Trump wants everyone to know that they're meeting again, it proves that like the first round was really just the first round, and eventually it's either World War III or they're gonna be adults and come to an agreement. And it looks like they're coming to an agreement instead. I want to ask you about the neoclouds and your take on what you're seeing there with the run there. But before that, let's just give a quick listen to Jensen as he's continuing to make the argument that compute is unlimited.
You can say that about Nvidia today. You can count on us every single year. If you would like to buy $1 billion worth of AI factory compute, no problem. If you like to buy $100 million, no problem. If you like to buy $10 million, or just one rack, not a problem. Or just one graphics card, okay, no problem. If you would like to place an order for a $100 billion AI factory, no problem. We're the only company in the world where you can say that today. I can say that about TSMC as well. In history, can you?
Okay, so Nebius getting the run that it's getting, CoreWeave getting this $1 billion investment by Jane Street. Do you think the neoclouds are overextended, or is Jensen right and there's just not enough compute?
It really depends on which neocloud. And so from a stock perspective, Nebius is extended, but clearly the market is just buying all dips in this thing. So I personally would not short Nebius here. I wouldn't even short the stock market from here because all-time highs are not a position to short. You don't short all-time highs. You need confirmation before you short all-time highs. But there's a lot of catch up to do in some of these neocloud plays. So just to preface to people, I am not bearish in Iran. I just decided to sell my position. And just because you're not into something doesn't mean you're bearish. Like that's like saying that you're bearish Nebius, which you're clearly not. It was just your strategy to move into add more to Nvidia, and that's completely okay. And I do think that the story with Iran was not as attractive as Nebius. But if you look at this, Nebius is at all-time highs. Iran is 50% away from all-time highs, or maybe like 30, 40% from all-time highs. So there could be some catch-up there. If you look at it trading as far as ARR value, Iran is at 16 billion. So that's, what is that? Like it's trading at 2-3 times ARR. Nebius is trading significantly higher than that one. But I think Iran needs another deal. They need another deal to solidify their continued momentum to all-time highs. If you see them come out with another deal, like this thing is just going to go up.
Do you feel the business model of the neoclouds, which have been getting a lot of flack over the past couple of months around dilution, unprofitability, yada, yada, all of that is inconsequential in comparison to the TAM of inference, as Goldman Sachs put out today? Or do you think there's just too much FOMO in the neoclouds? Kind of how are you squaring those two arguments together?
There's a lot of short squeezing happening in these stocks. There's a lot of FOMO happening in them. Like without a doubt there are. I mean, Nebius is a $40 billion company, so it's very tough to find that FOMO actually push it up unless it's a hedge fund putting in billions of dollars in the company. Like $40 billion company, you'd need at least $4 billion to push it up 10%. The thing makes crazy moves. There's obviously a lot of playing when it comes to this one. I read is $16 billion, so it doesn't take that much new capital to bring it higher. Now, I think that these earnings that they had released in the last couple of quarters says that they're both going to come in with like high single-digit ARR, right? And that is less than a year from now when that's going to happen. Now, but remember, ARR is the annualized run rate from the last month of the year. So that doesn't mean that they're going to have a realized revenue of $7 to $9 billion. That means that if you multiply that last month by 12, that is going to be your annualized run rate. But that's the assumption that the forward revenue is going to be $7 to $9 billion. I forget the exact numbers for Nebius, but that is what the market probably was already priced in for Nebius. And I think the issue is that for IREN, people see this $6 billion dilutive event, which isn't actually a dilutive event now. It's just the right to sell $6 billion worth of shares into the open market. So they don't even have to do it. Actually, they did part of it, but they don't have to do all of it, right? And that's the right to do it over a period of time. So they could do that over the next 2 or 3 years, and that'll be just fine for them. And people are probably going to be like, oh, well, there goes the bearish thesis for IREN. It was really just a matter of a weak market, which is what really pushed IREN down below $30. Right. So who would have thought that was going to happen? Nebius was like $75 when IREN posted those earnings, and look where it is now. It's 3 times that price. So it really is it's a lot about sentiment right now, right? And people were ill-positioned on Nebius, and this happened. People were ill-positioned on CoreWeave, and this happened. And, you know, I got to be honest, maybe IREN is going to go without me, but that is totally fine with me. IREN will probably have its moment, and I think they need like a serious catalyst. Like they need to get another deal, like a very reputable deal, not like a small player. But if they get an AWS deal, then that would mean that they are in some way or form providing compute for Anthropic, and anything that Anthropic touches is just gold right now.
It's just gold.
Not gold though. Gold is having a bad run right now, but yeah, it's pretty insane. And now you have Jensen basically pumping these stocks. Like it's just, who knows? What if Jensen mentions an investment in IREN? Like that thing's going to launch. They are a preferred cloud partner of of Nvidia. So we'll see, man. If they get that catalyst, the thing is going to go up.
MYSE, by the way, now down 50% from the highs in the after hours, 370 to 260. See, this is what I think people thought would happen to Allbirds today. It would spike up and then just spike down, but it just kept going up. But that doesn't happen every time, which is why you have to be so freaking careful playing this game. And maybe this thing comes back. Birds went vertical today. I don't know if that will continue to go vertical, but it doesn't happen that often. So you can't feel too bad if you miss a 6x in 3 hours, because it usually doesn't happen like that.
So did you see my post about HIMS?
I didn't. Let me pull it up.
So basically, the FDA is going to formulate a meeting where they're going to decide to lift restrictions on certain peptides. And
Correct.
Obviously, peptides is part of the shelf for HIMS. HIMS is up 13% today since that news came out. So it was basically flat before the news came out. Maybe it was like up 1% or 2%, but they jumped up an additional 10% during the market. And then now they're up 4% after hours. And if you look at the HIMS chart, dude, this thing has been basing out since its previous local highs. It is like literally breaking out to a cup and handle.
Are you saying HIMS is ready? Is that what you're trying to say?
I think HIMS is ready. I think HIMS is very ready right now.
Is Davis in the chat? Because Davis is going to...
Very confident.
He probably just woke up from you saying that.
Yeah. I think HIMS is ready. I have no position in it. So, you know, do as you may with it. But my guy, the short float in this thing is crazy. And if we are back, this thing is seriously going to come back.
Well, also, if we're back, we should see everyone participate, at least if you're a decent company putting up good earnings. I mean, if freaking this MYSE nonsense and birds are going up, HIMS is actually doing real revenue, real profits, right? Like they probably deserve a higher price of sales than 3, especially after the Novo lawsuit. So yeah, to your point, maybe it is having a chance to get up there. Robinhood, what's your thoughts on this before we talk about software? I believe, I mean, you've been long this name since like $20, $30. How are you feeling about it?
I mean, I feel pretty good about it. I didn't add to the position. Stock Talk did add to his position lately, and he freaking double bagged that thing on calls overnight. Like, I don't know, man, that guy's another breed, but I feel pretty good about it. It's definitely getting a lot of catalysts here, and it's outperforming Circle now, which is pretty interesting to see. It's also outperforming crypto. So we're back. There's so many good setups in the market right now, especially when you're at all-time highs. Especially when
bro, do you remember last year
Yeah.
the run Hood were on? Like when it was a bull market, Hood was unstoppable. Like there was nothing stopping it from. And although their comps are going to be tough this year, if the momentum comes back, I mean, what were all these people trading Allbirds on? Robinhood.
Yep.
Right.
Yep.
So it's like, to your point, maybe triple digits doesn't seem that crazy now. And if it's ready to go, then I guess this bull market's ready to potentially go. Hey, what's the bearish argument you would give right now to not either buy dips, to not buy into strength, or to maybe sell more aggressive cover calls? How could you justify to yourself that it's too good right now?
I would say that if you're over here trying to buy calls expiring on Friday or next week, like you're playing with fire. You really are, because the market has not had 11 green days in a row since 2021. And there is a world record back in like the 70s where it was up way more than that consecutively. We are coming from a period of extreme bearishness, right? So it is mean reverting back. And usually when things mean revert back that quickly, it ends up blowing past it. I would not stand in the way of this market, but at the same time, I wouldn't try to press anything right now that hasn't already seen that valuation appreciation so far. So right now, in my opinion, the best place to be, seeing that semiconductors are at an all-time high, the best place to be for risk reward would be software stocks. And that's what I planted myself in with ServiceNow at $86. And I thought, okay, maybe we're going to kind of chop sideways a little bit. You saw today, IGV is up nearly 4%.
7%.
Yeah, it is a crazy freaking move this thing does. But
okay, so let's talk about software. Did you think it was overdone on Friday? And do you think IGV is bottomed?
I don't like to know if it was overdone. I don't like to say if it was overdone or not as the knife is falling, right? So I can say that it's done once we have that recovery. And if I look at the ServiceNow chart, it definitely looks a lot better than Friday. We recovered the 9 EMA on the daily. On the weekly, it still looks like crap, and the monthly still looks like crap. But if you really think about it, looking at the IGV ETF, this one looks constructively better. It recovered the 50-month on the monthly, of course. It recovered the 200 weekly moving average, which is a significant moving average to support on. On the daily, it's looking a lot better. It's above the 20-week EMA, it's above the 90 EMA, it's above the 20 and the 50. Like, it is looking a lot better, and you really don't know that something's actually back until you get that confirmation. So this is a thing that people say. It's like, oh, if you're so bullish, why didn't you buy it when it was the bottom? It's like, first of all, how did you know that was the bottom? And second of all, you wait till the confirmation, right? You don't buy at the very bottom because you're never gonna be able to time it. Because if you do that, then you're gonna buy the knives at like 120, $100, $85, whatever on ServiceNow.
Exactly. ServiceNow from 190 to 100 or 150, you would have thought is the bottom. But you didn't get it at 80, you got it at 86. It's at 94. It's like, who cares?
I'm fine with that. And I'm also okay being wrong on it, because if it makes a new low, I'm out. Right. But dude, I sold this thing at 175 before it came down. And that was more of a technical sell on that point, which I've been focusing more on technical selling. My entries and exits are more on a technical basis. My longs that I'm doing is more on a fundamental basis. We could talk about Fastly and ARM Holdings as well. But yeah, like you know what you want to buy based on fundamentals, based on financials, and you know when to enter and exit based on technicals. And right now, software is looking like it's setting up for a major comeback. Now, are we going to go back to crazy valuations as before? I mean, time can only tell. We need to see ROI with this, but I'm only looking at companies that are either profitable or heading toward GAAP profitability with at least free cash flow profitability and part of some sort of theme in the market that the market loves right now.
Fastly, let's get your quick thoughts on this. So this is one that Jason has been looking at. I've been looking at. I don't have a position yet. I think Jason bought 2 days ago. You've been in it for a while. Why should people think of this one a little bit differently than traditional software stocks?
So traditional software stocks is basically having a SaaS platform based on charging people as well as license-based usage or even consumption-based usage. And what makes Fastly a bit different from that, and this is also the same thing for DigitalOcean and Cloudflare, is that they provide a content delivery network, right? So if you have LLM sitting in Los Angeles and New York, but someone sitting in the middle of the US, or better yet, someone sitting all the way in Latin America, and they want to start hitting these OpenAI queries or Anthropic queries, Cloud queries, whatever it is, they're sending all their traffic to the data centers that OpenAI has their stuff in, which is in Los Angeles, New York, and they're waiting to get it back. And that discrepancy or that spread between when they send that query to when they get the information back is the latency. And the latency is super important when it comes to nowadays. Even at the speed of light, latency can still be pretty critical when you're talking about like applications that are client facing and upfront. You know, even like 3 or 4 seconds, like even like 200 milliseconds of latency is bad, right? Like remember,
I get so annoyed at ChatGPT
Yeah.
when it's slow, dude. It's like that's the one thing I don't like about it. It's slow.
it is. It's super slow. Like, okay, for people who are gamers out there, do you remember playing like Counter-Strike back then? You'd see like the 10 ms on the top or like the 70 ms on the top. That was your latency. That is a response time you're getting from when you shoot your gun. It goes to the server and then everyone in the map sees it, right? If that thing is like 300-400, then you're like chopping, you're glitching, and like it's the worst gaming experience ever. Now think about this on a multi-billion-dollar perspective where companies need the fastest and the best, right? They don't have time to sit there and wait for the latency to go to New York and back to them if they're located in Latin America. They're gonna utilize these content delivery networks where basically it's caching the websites and everything up front at a closer location to the user, so that way they're getting responses faster. Let's say you ask the LLM, what's the best restaurant in town? And somebody had already asked that 2 hours ago. It's caching that entry so that way it sends it to you very quickly. Now, from an enterprise scale, it's obviously a bit more complicated than that. But that's what Fastly does. That's what DigitalOcean does. And that's what Cloudflare does. But Fastly is at a much smaller scale than those two.
So the more agents, the more queries, your argument is the better, the more revenue essentially Fastly is going to make, which has nothing to do with SaaS per se, right?
Well, technically speaking, these SaaS companies actually do utilize these content delivery networks. But think about it back in 2023. It was just Joe Schmo as well as myself asking ChatGPT like, hey, what is a scab on my foot? Like, what is this supposed to mean, right? But then now enterprises have rolled this out on a mass global scale that there's millions of people using these LLMs every single day, more than millions. But then now you have agentic AI on the surface. That means that you have like a multi amount of those people doing this. So like, let's say you have 100 AI agents running per person. That's how 100 times I know. Now that's a bit exaggerated, but that's the importance of having these CDNs out there, because when you have these models that act better and a lot faster, people are going to want to utilize them more. They're going to want to implement agentic agents out there, which is like multiple times that. And that's why this is becoming super crucial as we continue to go on with the AI.
Do you care about valuation here, or this is more of a AI play? You got to look past valuation.
I think when it comes to this one, in addition to a lot of stocks that we invested, right, you got to look past the valuation, past the PE, especially when we're talking about non-profitable companies. The PE is going to be through the roof. So take, for example, Tesla, right? The PE is like 100 plus, but the stock continues to go up. People are looking past those metrics, and value investors will never touch certain things like that because they're gonna be like, oh, those discounted cash flows. You're not really getting your money back for at least like 30 years. And by then you're going to make more money putting your money in treasury bonds, right? When it comes to Fastly, it's more the rate of acceleration. So they came in last quarter for their fastest growing segment, which is like $21 million. They grew that at 64%. And that has to do with the content delivery networks as well as the firewalls. So their other segment as well was also growing in like high teen digits. The thing that came up last quarter is that is their first free cash flow positive quarter. But on top of that, they are guiding for a reacceleration next year. Now that is what's driving momentum, but it also has a thematic approach, right? So this is already a software company that got hit by it. But if you look at it from a technical outperforming perspective, this company has actually been outperforming the market as well as the IGV software ETF. So this will continue to be a leader until it proves to not be.
So it topped out at 35 back on April 2nd. It's now at 23, was at, I think, 20 yesterday. It's up 130% year to date. Market cap's $3.5 billion. They're going to do about 700 million of revenue here for the year. Your argument is if we see a continued reacceleration of their ability to monetize the queries via their CDN and caching, that's the story. And that's what we should care about. Is there like another catalyst, could they get a deal with Anthropic or something? Is there something that could really be like, oh my goodness, it's taken off type of moment?
That could be a catalyst, but we're talking about a company that's like $700 million run rate. It's not a lot. Like, I don't know if Anthropic's going to go to them. They probably are diversified in smaller players, But when you think about Akamai, which also does the same thing, Akamai deals with more of the legacy contracts. Fastly is dealing with much more of the newer contracts. So if we continue with this move as far as agentic AI goes, and that's going to be a tailwind for the company. And then maybe once they do start to surprise as far as that upside in terms of revenue and earnings, that's when it's going to have the analysts re-rate or review or upsize their estimates. And that is ultimately what pushes the stock higher. As long as you have expanded earnings growth, that is going to push the stock higher.
Okay, last question on this. And again, I'm going to spend some more time this weekend actually doing some broader due diligence. But are they that necessary? Could this be resolved in a different way?
I mean, there's other companies out there that do the same thing.
But not this other company. Like could ChatGPT make their own queries faster without needing a Fastly?
They're always going to make their queries faster based on how efficient their models get. But if you're asking, can they build their own content delivery, never do that? Probably not. They're outsourcing all that. I mean, OpenAI doesn't even have their own data center. They're outsourcing all that to Microsoft. And yes, they are partnering with companies to do that, but they're partnering with them. So these other companies are the ones, like the actual people who build the data centers and the actual data centers who do partner with these CDN companies. Those are the ones that is basically giving these guys business. Now, if we're talking about Cloudflare, that's a different story. Like that's a much bigger company. But when you're talking about Fastly, this is a much smaller company that could potentially like 2 or 3 times in the matter of the next few years. Cloudflare probably won't do that.
And you think Cloudflare is also technically a competitor to Fastly, right?
Yeah, it's competitive Fastly.
Got it. Okay, we got about 10 minutes left. First of all, Sam's YouTube is right there. So thank you, Sam, for being on. Please make sure to subscribe to him. I got a couple more. We'll do rapid fire. If you have any questions for Sam, any stocks, we'll hit him with that. Last time you pitched a stock here, I think was Nebius at 30. I think that's the last time you. Oh, it was Rubrik as well. So Rubrik after that, got hit with the software. That one made a nice little comeback today. Hopefully that gets closer to 70. But I think you were the first person to tell me about Nebius about a year ago.
Yeah, Nebius has been pretty crazy. That thing continues to push up. I'm like, should I sell covered calls in this thing or should I not sell? I'm scared to sell these covered calls. But at the same time, those premiums are really jacked up. What was it? Nate pointed out that the 240 strike calls from
$7
of $7. That's crazy. I've been thinking like, hey, maybe I should do that. But guy, I have like shaky feet whenever it comes to selling covered calls because I don't know if I want to let go of any of my shares. Like I should have done the same thing for Fastly. I actually did sell covered calls in Fastly and then I closed them way too early. But it was too much very quickly. So who knows? Like you got to really think about when you're okay, where you're okay selling your shares. And that's where you sell your covered calls at. And those are the ones where you do it. But if you're trying to do it like from a perspective of trying to generate revenue, I don't know. You got to be a really good expert to do that because there are a lot of people I know who bought back their covered calls at a monstrous loss lately for Nebius.
Yeah, I mean, even Nate said he covered back his Nebius. And a lot of it comes down to if you're selling the covered call as a hedge, if the hedge goes to 0, which means your shares get called away, you have to psychologically also realize there's a reason you sold it in the first place, right? If not, you got to be better at being able to effectively roll it. Is it a good time to sell puts? What would you say to that question?
Could have sold puts and HIMs today.
But in general, do you think this is a bullish market enough where people can sell puts and like make money off of it?
I don't think it's a good idea to sell puts and things that have gone parabolic. That's very difficult to do. Things that have a high floor, like HIMs, that's probably a better idea to sell puts on. Selling puts on Nvidia near $200 is kind of risky unless you plan to own it anyway. If you're okay owning those shares, then why not sell puts? You get a pretty premium for it, and you could potentially not get those shares, if anything. But if you're just doing it just to like generate revenue, then you have to look for companies where the floor is high, where companies that have not went in a parabolic run next have extended valuations. Like selling puts at Nebius, unless you want to own those shares, you got to be careful, right? The premiums are high, but this thing can drop like 30% in a couple of weeks.
That's the thing. Nebius at 160 looks great, but if it goes back to 130 where you sold your puts at, let's say 145, more reasonable, because that's the only place where you're gonna get some premium, right? Because of how much up. If it goes down, as you said, 30%, it's not gonna feel fun then to own those shares and be that underwater.
Yeah, I mean, the other way around, right? When you sell cover calls, you basically have the right to sell shares at a certain value. When you sell puts, you're selling, or you have the right to buy shares at a certain value. The premium is what you collect when that does get exercised or if it expires out of the money. So you have to remember how that game works. This isn't like some sort of casino where it's like, oh, well, I could just make money this because this is going to continue going up. You have to be okay with the end result if that happens. Otherwise, you stop yourself out. It's perfectly okay to buy calls back or buy sold puts back if that happens. There's nothing wrong with that, right? It's like Nate bought his calls back. Like, who's going to come after him being like, how dare you buy those calls back? You're the worst person. It's like, well, don't forget the guy's also sitting on hundreds and hundreds and hundreds of shares. So even though he bought back at a loss, he still appreciated the value of those shares. He still won, right?
Yeah. Zeta, we both like this name. Is it time for it to give us 25 again?
She's ready. Zeta's ready.
Why do you say that?
Let's see. It's software is back. It closed above the 50 EMA on the daily, which looks really good. It closed above the 50. It closed above the 50 EMA, the 50 daily. It's above the 21. Like this is bullish again. I would like to see the 9 EMA flip back above the 21 over here. I'm looking at technicals on my chart. But it is really setting up. Like these moving averages are all curling up. That's very good news to see on the weekly chart. It closed right at the 50 weekly, but I tell you, man, this thing looked like it bottomed. I'm biased.
Dude, I agree because biased. And also, well, we're biased, but valuation wise at 1434, which was on Friday, it is like, what, they're going to get to $8? Like this is a company that's growing 35% and profitable.
Yeah.
And doesn't have a multiple yet.
This is obviously one of the companies that I'm bullish on in software. And I've round tripped a thing, right? I've round tripped Rubrik as well. The $100 stock. Like, I should sell Rubrik, right? But I didn't. And I freaking round tripped the thing. Right. And that's fine. Like I round trip fastly. It happens all the time. If you're holding on something long term, like you have to be okay with round tripping stuff. Right. It's like every single Palantir shareholder is like, man, I should have sold at 200. It's like, how would you have known to sell at 200?
No,
you wouldn't have known.
Look, you can say it in a joking way. I should have done this. I should have done that. Everyone's saying, I should have put $1 million into Birds today at 4. It's like, you never know, right? No one ever knows. And so you can't beat yourself up too hard about that. What are you thinking about SoFi here at 19? Do you like this as a momentum play at all? Do you think it's too depressed or it's not enough to catalyze you?
Oh, that chart actually looks a lot better. It's above every moving average except the 100 and 200.
Dude, it hit 14.
Yeah, that's pretty crazy. I'm not going to do it, but it's certainly looking a lot better. Those are 3 massive gap up days with increasing volume. There's so many good setups in the market. It's not even funny. Like,
give us 3 of your favorite setups right now, if you had to, on the top of your head.
Okay, so without being biased, I think Amazon is setting up pretty nicely. It's probably to do what it usually does by consolidating near all-time highs. I do think that the space stocks are setting up very nicely. I'm not in Rocket Lab, but when I'm looking at this chart,
Are you in ASTS or no?
No, I sold ASTS a while ago, but I'm in Iridium.
Okay.
Actually, yeah, I joined Stock Talk on that one. That's been a freaking monster. If you're looking at relative outperformance, space stocks are like really coming back. So Globalstar is being acquired for $12 billion from Amazon, which is pretty insane. That's a big acquisition, right? So that the target is $90 per share. It's at $80 per share. Now, I would not play this just to get that additional 12% upside, because if that deal falls through, then you're very much screwed on this. But there's other proxy plays to do it. So this is a satellite company. What are other satellite companies that are out there? There's ASTS. There's also the infrastructure build out for Rocket Lab. There's also EchoStar, which has went on a huge run lately since they sold their spectrum to, I believe, SpaceX for Starlink. Amazon is somewhat of a proxy play for that one, but that's really pushing up the juice for a lot of the other things that are related to them. Space stocks have been dramatically leading for quite some time, and even through all of the drawdown, they've been leading. So if there were stuff that I would be buying for a short-term play, it would probably be Rocket Lab, because that thing looks like it's about to break out here. It's back above all the moving averages. ASTS.
This is your SpaceX proxy, right? This is the de facto SpaceX proxy.
Yeah. ASTS, I don't know why they completely sold us off because of that GSAT deal, but that reclaimed the 100-day moving average today on the daily. So could be ASTS. My only core with ASTS is that it's a $33 billion company right now, and really their only play is having the MNOs on their board. But if this theme really does accelerate, then ASTS could go higher, valuations aside. Rocket Lab is probably one of your safer ones because they do have the government contracts, but they're also a launch pad per se and space infrastructure, also as far as launch systems, right? So they also have a software segment as well. So Rocket Lab is probably the safer one. And in my opinion, if this space theme continues, like Rocket Lab is going to go back to $100.
Do you like Tesla here or not at all?
I don't think I'll ever own Tesla again. But that is a massive candle. Wow.
Dude, it's almost 400. That's a big move from 330. Like
that's crazy. Dude, everything is looking good right now. Everything is looking good.
Speaking of Tesla, these were the top 20 stocks traded in the options market today. Tesla had 5.7 million contracts. I think that's maybe not a record high, but it's up there on the daily amount of options, and 3.6 million calls, which doesn't mean people bought calls. They could have sold them, but still, look at the call put ratio, 0.5. I mean, that's incredible. Then you had Nvidia, Microsoft, Apple, SoFi was in your top 5, Meta, Hood, top 10, Amazon, Palantir, Micron, Google, Oracle, Broadcom, Intel, Snapchat, MicroStrategy, Netflix, IONQ, Quantum Names got back there, Wolf, and then AMD. It's a lot of calls that are being traded here.
Terrible has been a pretty interesting one. When did you buy Oracle?
137.89 on Friday.
Damn, the absolute low.
No, I think the low was 134. But that one was better than the other software names. But if you bought anything on April 13th in SaaS, Palantir doesn't give you that many dips. Palantir went to 120.
Oracle could be a crazy comeback. It really can. I mean, I don't have access to Bloomberg terminal, so maybe someone who does, they can look at the Oracle CDS spreads, credit default swaps.
I think they peaked. Like my bet is that the credit default swaps have priced in enough bad news. The stock was at 350. Like, I mean, everyone's leveraging up on debt. But when Anthropic goes from $1 billion to 30 in 15 months, there's a reason to leverage up on debt. This compute thing is real. I think the market's realizing that.
For sure, dude. I think the whole thesis with CoreWeave and OpenAI and everything, if that's unraveling, meaning that if the bear thesis on that is unraveling, that these stocks are going to come back pretty hard. I mean, what better time is there to do than the all-time highs to push these things higher?
I love it. Sam, thank you for being on the show. You are a crowd favorite. Someone says, Sam is my favorite guest. He is so gentle and warm. He is fine with not being perfect. Also has good takes on macro and TA. Sam brings up tickers, and he's not shy to say what he thinks.
Yeah, I've been wrong so many times. And the point, no, because it's like, I'm not gonna sugarcoat it. Like I've been wrong so many times, but the point is to lose less money when you're wrong and make more money than when you're right.
That's all.
That's the whole point. Yeah,
all of us. Absolutely. The funniest moment on this stream will be when you bought $1,000 of inverse Micron before earnings.
Did you have to bring that up again?
Up like crazy, and you did the dumb thing of saying, "Yeah, I'm short Micron with $1,000," and everyone was like, "We hate him," because all the longs of Micron were like, "All right, he's our enemy. We needed an enemy. We got one." Micron, Micron goes to the moon, and then the chat's killing you, and I'm like, "Sam, are you even down?" He's like, "It was $1,000." I was like, "It's $1,000. Like, it's not that serious."
It really was, and I was wrong, and I got out before I lost a lot. Like, I'm not going to be like one of those guys where it's like, I refuse to be wrong and continue shorting Micron. Like, God, the price is telling you you're wrong. So I'm going to agree with the market. And I'm going to get out. And
look, it happens. I've had plenty of those mistakes myself. And the one thing I will say is going into earnings season, I think a lot of people have kind of matured into not taking earnings bets. But if we have this bullish momentum, I think you're getting a lot of call option volume betting that earnings are going to print. And hopefully they do. But if they don't, if we at least stay at these levels, should be okay.
Yeah, that's good for Hood too. You know, I really do think that when you have earnings season, it's very hard to be bearish earnings season. It really is. If you look at all of the earnings seasons, we always run into earnings unless there's a catastrophically bad earnings print for any of these companies as far as AI goes. Like the market just continues to just move up.
Yeah. All right. Thank you, Sam. Please make sure to follow him on Twitter. I'm linking his YouTube here as well. He goes live every day at around 2:45 p.m. Eastern. And we'll catch you on next week.
All right. Thank you very much, sir.
Thank you, Sam. Appreciate you, man. Later. All right, let's bring on the next guest on the show. I hope the space mob is ready. It's been about a year since I've talked to this guy. Last time he was on the channel, I think his stock that he has been championing for a while now was $25. That stock has done relatively well since then. It is time to talk about the one and only ASTS. Ladies and gentlemen, we have and Pan Man. What's up, man?
Hey, Mitt. How's it going? It's been a hot minute.
It's been a hot minute, and you've been right for this past hot minute.
Yeah. It's been, I think last time we spoke, you're right, the stock was in the 20s. And then over the course of the last several months, I think we peaked at 128. And of course, we pulled back a bit on this Amazon news. But yeah, there's a lot of bullish catalysts ahead in the coming weeks and months. And so, yeah, putting aside the Amazon news, which we can talk a bit more about, yeah, I'm very bullish on the company's prospects.
Well, I'm excited to have you back on the show. We got the A's in the chat. I love it. For the people that don't know who you are and have never heard of you before, or just kind of are not aware of kind of your brand in the finance media community, can you give a little bit of a background on who you are, how long you've been talking about space, and kind of why you do this, and why do you get on the show and do these podcasts?
Yeah, so I was formerly an investment banker and hedge fund portfolio manager. All those combined, probably, I guess it's maybe 20 years of experience. And then I left the industry and pretty much went into retirement right as COVID hit. And then during COVID, I became, I got sucked into SPACs and all the things that were going on then. And I used my institutional knowledge to help educate people during that period, that wild and crazy period of time. And so I started a social media account, just posting some ideas and educating people on the structure of SPACs and pipes and all these different things. And over time, one of the ideas that I became very close to and truly believed in was AST Space Mobile. And so that's been my primary investment. It's an overwhelming majority of my public portfolio, but I do invest in a few other names. But yeah, I've held AST. I was at one point, I guess I owned 7% of the outstanding warrants. Like I had 950,000 of these things, and then pretty crazy. But then, I exercised some, sold some, and flipped into stock. And, ever since the lows of $2, have continued to hold and ride this thing up. And, there's been a tremendous community that's developed around it with folks from all walks of life, whether finance, engineering, you name it, just different vocations. But I think the cool thing is that the community's due diligence is unparalleled, right? And so having that level of crowdsourcing due diligence has enabled people to hold this company with conviction and get through all the FUD and the machinations of market volatility and doubters to ride it to where it is today, which is, AST's on the cusp of commercial service. We've got a second Block 2 satellite, Bluebird 7, that's going to launch on Blue Origin New Glenn this either Saturday or Sunday. And then we've got 2 Falcon 9 launches, putting up a batch of 3 and 3 satellites coming in May. And those satellites will get shipped sometime this month. And so, yeah, the company is marching towards getting to approximately 45 satellites launched this year and getting to approximately 90 into early 2027. And during that period of time, launching commercial service.
I know you also invest in other companies, but is this the majority of your funds that you're managing, AST, or is it kind of?
Yeah. So it's a majority of my PA, and AST is a big part of it. But then I've got other investments. Like I tend to look at some of these smaller cap names like T1 Energy, Bridge Aerospace. There's been a number of ideas that I've invested in over time. Some that have worked well, and just like Sam has said before, some that haven't worked well. But obviously, in investing, if you're batting above 50, and as long as your wins are bigger than your losses, you're doing pretty well.
Okay, so I want to kind of get your reiteration of the ASTS thesis, but I think you can kind of do that while you explain to us this Amazon news. So the stock has been down over the past couple of days because Amazon is acquiring GSAT. So kind of just, I'll give you the floor. Why do you think Amazon's acquiring GSAT, and why could it be bearish or bullish for ASTS?
Yeah, so taking a step back, AST Space Mobile is deploying this constellation, these very large satellites called Bluebirds. They have the large phased array. They have high power, and so they can communicate directly with your unmodified phone. So you don't need a special device. It can connect with your phone or any other 3GPP device. What I mean by that is, as we've seen this proliferation of IoT devices, the providing connectivity to those devices outside of traditional terrestrial coverage is going to become increasingly important. So think about like autonomous semi-trucks, cars, robots, drones, all these things, right? And so it's not just about mobile phones. It's about IoT connected devices. And so AST is doing this in partnership. So it has 3,800 patents. It's got the largest phased array orbiting the Earth right now, and they're going to be deploying more of these satellites. But they've got partnerships with MNOs. So AT&T and Verizon sit on the board. They have strategic investments. They've got mutual exclusivity for anywhere between 3 to 4 years once the service launches with those guys. They're also working with Vodafone, Rakuten, Orange, Saudi Telecom, and there's like 50 MNOs globally that they're working with. And so the cool thing about this model is that they're not selling the service directly themselves. So it's not a direct-to-consumer type of business. They're actually a wholesaler. So they provide the satellite service, and then the MNOs resell it for them. And so the MNOs obviously get saddled with customer acquisition costs, billing, all that stuff. But if you can imagine, you have an install base of mobile phones already in customers' hands. And so through AT&T and Verizon, they can just, once the constellation is deployed, they'll be able to just flick the switch and turn it on. And so imagine like Netflix type of subscriber numbers where if you're charging $10, $15 for this type of broadband service to, in the US, if it's, call it 200 million subscribers, that's a pretty staggering number, right? And that's just in the US. And so they have a strategic investment from Google. They're working with Meta right now. And so that's just the commercial business where, they're pursuing the MNOs that they have under contract represent about 3 billion subscribers. But then outside of that, the company is also pursuing military applications. And so with this large phased array, you can do connectivity to warfighters. Imagine, connecting drones in the battlefield. So that's like one application. But the cool thing about phased arrays is you can also use it for sensing. And so imagine like radar, or, China just proved that with their satellites, they can actually detect stealth aircraft. And so the company is working with DoD. It has a award with Golden Dome. There's about 10 different use cases. And so like electronic warfare, GPS backup, positioning, navigation, timing, there's all these things. And so this year, interestingly, the company's 170 million of revenue that's projected. A vast majority of that is actually military revenues. And so the military business is pretty big. And then you've got the commercial business. And so, yeah, there's a tremendous amount of opportunity. So moving on to Amazon and this Globalstar transaction, what's interesting there is that Amazon is buying Globalstar, which is a legacy, communications provider company that's working with Apple. This transaction pretty much validates what AST is doing, and obviously Starlink. So you've got like Elon Musk, who stepped into this market for direct-to-device, rolling out service in actually it was last year, and they bought EchoStar to get their spectrum for $23 billion. And now Amazon's shelling out $11 billion to go buy Globalstar to try to turn that business around and get into the market as well. And so there are a few distinctions in what Amazon's doing, and I can go into more details about that. But Globalstar right now, is
Globalstar a competitor with ASTS, like full stop?
It isn't today. So they provide the Apple has through a transaction where they invested up to $2 billion. They got 20% of Globalstar and 85% of their current and future capacity in the satellite network. So Globalstar's 24 satellites are like, I think, 20 years old. I mean, it's really old, right? And so that service is a narrowband data capability to the phone. So limited SOS or text messaging. So it's not broadband, right? But then Amazon's plans for Globalstar is eventually, and they talked about upgrading the network in 2028. I think realistically, due to regulatory issues, and then they've actually got to develop a next generation satellite, you're probably looking more like 2030 for Amazon to upgrade the satellites there. And so it will be a competitor to a degree, but I think it's going to be captive to Apple Apple phones and watches, and then Amazon, applications. But for your bread and butter, like broadband through Verizon and AT&T, AST Space Mobile is going to be the service that people use.
Okay, so then the bigger question outside of Amazon, which I think your core argument is that they are not necessarily a competitor, is obviously the SpaceX IPO coming up.
Yeah.
First of all, do you have any allocation to SpaceX?
No, I'm a AST Maxi. So,
wow! If you got SpaceX allocation, your cult would turn on you, basically.
Yeah. No. I mean, look, I wouldn't turn it down, but I'm not proactively seeking it because I think the valuation discrepancy, between the two is so high that I think the names to own. I think someone mentioned before Rocket Lab, like that's pretty interesting, but I think the names to own are the existing space companies because if you look at let's peel back the layers of the onion. So for SpaceX, sorry, I'm just pulling up some information here. But I think for that are from Starlink and a vast majority of the profit. So I think for SpaceX, Starlink represents about 71% of the revenues and about 90% of the profit. Yeah. And so if you buy the SpaceX IPO, you're also getting XAI, which is losing money hand over fist, and eventually can Elon get there, maybe. But I'd rather go down the road of playing, the pure play. I want to focus on direct-to-device connectivity, and so AST is the purest way to play that, right?
I asked you this question last time, but this is the question that keeps coming up. Why should anyone care about AST versus Starlink, which seems to be the thing that's producing tens of billions of dollars of revenue a year, whereas AST, really has not had that ramp up yet?
Yeah, so Starlink today, the bread and butter is the fixed wireless business. So if you can imagine, they use a certain kind of spectrum that's called high band spectrum. It's Ka/Ku, and it requires line of sight, but it can carry a lot of data. And so that's why you buy a McDishy dish and you put it on top of your house or maybe on your RV, and that's the bread and butter service, right? And that's what generates most of the cash flow for SpaceX today. SpaceX and Starlink. But then Starlink has branched into direct-to-device, which they sell as T-Satellite through T-Mobile, right? And so that actually, and we'll see when the IPO prospectus comes out, but if you look at sell-side reports, that is actually what's driving most of the growth. And so if you can imagine if I want to have exposure to the business that has the most growth and opportunity, it's actually the direct-to-mobile business, right? And that's what AST is. And so if you can imagine, if AST can get just 10, 20% adoption from the 3 billion subscribers that it can cover through its MNO partnership today, the numbers are pretty staggering, right? So if you look at Street consensus, I'm just pulling up Bloomberg here. If you look at 2030, right, the Street has AST generating 3 billion of revenue and EBITDA of 2.9 billion. So the EBITDA margins here are pretty insane in that once you put the constellation up, and it's a fixed cost, obviously, then you can amortize it across all these carriers. And this is a service where you can oversell it, right? Because not everybody is going to be on the coverage and using, streaming broadband constantly. But just like any terrestrial service, like mobile service, when you use your mobile phone, you're using it for fractions of a time, right? And so this is a service where you can oversell it. And of course, if you have too many people on the network, you can throttle it back. But it's something that you can amortize across the globe, right? So if you have 50 MNOs selling it, reaching 3 billion subscribers, if there's 10% uptake, numbers are pretty big. If the ASPs are $10 to $15, that's a lot of revenue and profitability. And so longer term, you're looking at gross margins that are probably in the 85, 90% range, and then EBITDA is actually higher because you obviously are going to depreciate, the constellation once it's up.
Do you care about the valuation right now on ASTS? Do you think it makes sense, or the future potential of these deals with Vodafone, et cetera, are all that matters right now?
Yeah, so from a valuation perspective, obviously it's very expensive. If you're looking at, and this is where bears will come in and say, if you look at the last 12 months revenue and there's no earnings, the last 12 months revenue, it's very expensive. But you're pretty much valuing this thing on future expectations, right? And so when you look at 2028, it's trading at 26 times EBITDA, or 2029. I mean, that number comes down pretty significantly. And so it's all about the future potential, right? And so once the constellation's up and you turn it on, and you have subscribers paying, and then the other thing to keep in mind is like a majority of subscribers from these telcos are going to be on monthly plans where it's recurring revenue, right? And so how do you value high margin, 90% recurring revenue, EBITDA margins of 80, 90, 95%? That's very valuable. And so it's a bit different than some of these other space companies where if you send up a rocket, that's a one-off payment, and then you've got to do it again and again versus, and this is why you have SpaceX early on. They shifted from just launch to then doing communications. And this is why Amazon for LEO, and then ultimately trying to get into direct device, this is where the money is, right? It's broadband internet connectivity. And then on top of that for AST, and Starlink does this as well, there's a whole host of military applications where I think for this coming year, we've talked about this as the year of space, where you've got kind of two major themes going. One is the commercialization of space. So AI data centers is like a tremendous white space opportunity where if you're
Elon isn't crazy about the space data centers. That's like
no, he's not. He's not, because like if you think about the trade-offs of do we feed GPUs or do we feed humans? Probably over the long run, we probably need to focus on humans, right? And so when it comes to consuming energy, resources, land, cooling, like fresh water, eventually you're going to hit a ceiling on that, right? And so there's some people who say like, well, maybe we can put data centers underwater. Well, if you do that, then you're going to start boiling the oceans, right? And so there's all these like engineering problems. And so ultimately, it does make sense to put this infrastructure out in space where you can get constant electricity from the sun in a polar orbit. But that's one big opportunity that people are now starting to wake up to. And AST has a number of, they're putting up 5,000 kilogram satellites up in space that have 100 kilowatts of power production. They already have the building blocks to do this. And each satellite is filled with, today it's FPGAs, but ASICs. And so if you can imagine those satellites, switching them out for GPUs, like it's a pretty straightforward process. And so that's kind of like part of the story for AST, which the company doesn't talk about it much, but it's clear like they can go in that direction. But yeah, the commercialization of space, which is exciting and tremendous. And then of course you've got the military side, right? So the US focusing on sovereignty and Golden Dome and all these different applications. Obviously like the conflict in Iran just highlighted, for example, the importance of Earth observation, right? Where Iran was able to use AI and digital imagery from China to then go strike US assets. And so space, whether it's on the commercial side or Golden Dome, the NDAA is spending $150 billion. And so all these companies are going to play a role. And AST, Rocket Lab was mentioned by your previous guest. All these companies have awards from Golden Dome. And so when you're looking at a company that has dual use case, where it's not just consumer, but it's also government supported, that's kind of like that is the ultimate type of investment and that's what SpaceX is. And that's what some of these other companies are ultimately going to become.
And Panman, thank you for the time you spent with us. My last question for you is on Rocket Lab. What are you thinking about that as an investment, as a proxy to SpaceX? Would you rather have more ASTS versus Rocket Lab? Kind of how are you thinking of those two?
I'm an ASTS maxi, but I respect Peter Beck and what he's doing at Rocket Lab. They obviously are working on their medium launch vehicle, which is Neutron. And so that's an exciting catalyst for the company. They've also been doing acquisitions, and so it's not just about launch. They're getting into other aspects of offering end-to-end space systems. And so, if you want like a SpaceX baby that's not exposed to the tremendous amount of CapEx and R&D spend of AI, then I think Rocket Lab is a pretty interesting play. In terms of its margins, it's not as high it's not a services business, although they're trying to add more of that. But I think it's a pretty exciting story, and it's trading at a more reasonable valuation than SpaceX, and so I think the key thing is like for the space sector, as you get more attention from institutions, and SpaceX is kind of a watershed moment for the sector, where previously it was kind of viewed as like a niche area, but a rising tide lifts all boats, right? And so there's been a number of companies that have gone public, and there's going to be more. And so if you're a sector specialist at a multi-strategy hedge fund, space is actually something you can invest in now. And so I think it's going to be good for the entire sector.
I love it. Thank you, sir, for coming back on the show. Appreciate it. Congrats on all the success. You are, I believe, one of the leaders of this space mob, which actually, that's my last question. How does it feel to play a prominent role in this community? Because it's pretty cool, when a lot of people rely on your insights and they care about your opinion because of the hard work you put in doing research on this.
Yeah, I mean, just like you, when you go to these meetups for Palantir, when we meet up for launch, or sometimes some of the folks in New York, we just meet up for dinner and shoot the shit. Like it's great to have a community where I would say like I'm closer to some of my space mob friends than in real life friends. But it's there's nothing quite like a galvanizing process where you go through the ups and downs of investing, which is an emotional, it's tough, right? And so you build some amazing bonds, and of course when things go right and you make life-changing money, it just makes things that more sweeter.
I love it. Thank you, Anapan, man. We appreciate it.
Yep. Take care.
Next time. Thank you.
Bye.
Have a good one. Okay, there it is. Space Mob, that's your update on ASTS. One of the more interesting things that he talked about around the thesis, because I knew certain parts of it over the past year, but the defense part, I mean, I don't think ASTS gets that much of a defense premium or is thought of as like a defense contractor. And if they continue to execute, SpaceX definitely gets thought of as a defense contractor in certain areas. So, I mean, there's a world where that might not be sort of priced in the long-term trajectory of those EBITDA multiples he was talking about. And that might be another reason to be excited for this. But I also agree with him. The GSET acquisition does not necessarily seem bearish for ASTS, even if the market is at this moment interpreting like that. All right, we've got about 30 minutes left where I can stay on. I'm doing another stream at 6 p.m. on Twitch with a guy called Thread Guy. Yeah, does anyone know this guy? He's like a big crypto dude. And I'll link his thing right here. We will be live at 6 p.m. So he's on X. Okay, you guys know him? Yeah, so I will be on his. I have no idea what we're going to talk about, but he asked me last week, and I said, okay. And yeah, so I'll be on his stream at 6. So we'll be on for the next 30 minutes, go through some other headlines we got. And then it was a cool promo that he made. This shit looks legit. Look at that. Thread X Emit. Looks like, look at that, bro. It kind of makes me want to bring my beard and long hair back. That's legit, dude. It looks so dope. Like, I know you guys like the short hair, but I don't know. I think we need to explore some options. So yeah, I'll be with him 6 p.m. Eastern, and we'll chop it up about whatever he wants to talk about. Okay. It was still a freaking greeny green day. And I want to show you guys a little bit more of some of these stats. So I'm going through some of these option statistics. Take a look at this. SoFi 19 after hours. SoFi traded 620,000 calls, 109,000 puts. It had a 0.17 put call ratio. We're talking about 5x more calls versus puts on a SoFi. Same thing with Snapchat. 31,000 puts, 310,000 calls. I think the bulls are trying to come back. He's streaming you right now. All right, Thread Guy. I'll see you in 30 minutes. And we'll chop it up over there on Twitch. But look, it really does look like, I mean, SoFi was in the top 5. Apple, Microsoft, Nvidia, Tesla, top 5. Apple usually is not really top 5. It's more top 10. So you got the Mag 7 names coming back to get their. Micron, which was down on the day, still had a 0.6 put call ratio. Oracle got into the top 20. Your quantum names are back. I mean, it's just pretty exciting seeing this much momentum. The question is going to be, can it hold? And that's what I think all of us are potentially concerned about, to see if it could happen. But and we get a peace deal, dude. I think there's a better shot than not that it hold. And again, the reason I keep saying that is not based on the stock is going up, that's why it can hold. It's no earnings growth. based on a fundamental perspective on earnings, we are still not crazy, crazy expensive. We will eventually get there again, like we always do, but we're not there right now. And so if we're not there right now, maybe there's a better shot that that this stuff actually is able to continue. Zeta still making a little bit of a move after hours as that's continuing to go up. Why don't you multi-stream? You know, I don't like streaming on X because I don't think they give a lot of good data. And then Twitch, I just don't see Twitch as like a finance platform. I also like to have one chat that I can manage in one place, so it's easier for me to because I interact with the chat, I look at the comments, I try to see what's happening. So having it all in one place is just a lot easier for me to navigate. But some people do X, some people do Twitch. YouTube is kind of what I've been doing the best. I know there are platforms for multi-streaming. I don't want to multi-stream. That's the difference. Having everything in one spot is just a lot cleaner, at least for me, to be able to manage it. And because I'm a one-man show, you kind of have to be able to manage it. And look, YouTube's good now. There's some stuff they can improve there, but also I can trust YouTube is real. Some of these other platforms, it's hard to trust how real it is. By the way, look at this meme going viral because of Allbirds. Look at this. Say the line. We're pivoting into AI. Buy, buy, buy. This is literally what happened today with Allbirds. Is this still up after hours? Did anyone make money off it? Put in the chat if you traded it. Birds is down 6% after being up 580%. And then that MYSE nonsense. That is down 50 from the highs, but still up 93%. Still up 93%. Is Oracle long-term for you or a trade? I think Oracle's become more long-term. I'm starting to do a lot more due diligence on it. Initially I thought of it as a trade, but if the entry was decent enough where I don't think it's going to get back there, and it's essentially an OpenAI proxy in terms of the RPO they can get, I think it's become more of an investment. And if when Goldman Sachs puts out a note to their client that the level of inference companies are securing compute for is almost 10% of their headcount, Oracle, Nebius, CoreWeave, they're not going anywhere. Now, the business model, someone can push back and be like, is kind of ridiculous with all the leverage of debt that they're taking. I get that. But the actual core terminal value of what they're doing seems to be relevant. And if they can eventually monetize it, which the street is, giving them the benefit of the doubt, they can do that because Anthropic's growing like crazy as a case study for this. That's where I think they can keep going. What do you think about Netflix earnings? Yeah, so Netflix, put in the chat if you own this one. Wow, 107. Dude, Netflix is not that far from all-time highs. All-time high is what, 140 or 130? 134. It's far, 107 to 130, but it's not it was at 70. It's not that scary to imagine it gets there. Is Chicago sold out? Yeah, Chicago is not sold out. Thank you, Jason, for reminding me. Jason will be in Chicago, by the way. So Chicago meetup. Let me put it right here in the chat. Hopefully we keep up this bull market momentum. Chicago is going to be a party. But yeah, Chicago should be fun if we get a deal. May 9th is pretty much after all the big tech earnings, which is the day of Chicago. So again, it'll be fun. It's $100 for the ticket, but we don't make any money off the tickets. It's purely going into our costs. It's just a way to kind of bring the community together. New York, LA was awesome. Jason was in LA. And it'll be fun to have him in Chicago. Yes, Nate will be there as well. All of you guys that got into Nebius because of Nate, you can thank him personally, as he will also be there. I can't believe I closed Netflix for a 2K loss, biggest L this year so far. Yeah, look, it was scary when it was potentially about to take on $90 billion of debt to buy something that most people thought wasn't worth buying, but they pivoted. Honestly, you should be thanking Larry Ellison for wanting control over all the media with CBS and Paramount and Warner Brothers. This guy he wants to have the media, and he wants to pivot Paramount into a streaming platform with a conglomerate of news, and Warner Brothers was too attractive of an asset, which initially could have been a bear case for Oracle, to be honest, because he's levered up so much, but I also thought it was priced in at 130. So That's, Ellison was the reason why Netflix got it, and he paid him freaking $3 billion to get out. Yeah, they have TikTok as well. But I think it was such a good deal. Dude, like at the end of the day, HBO's assets are good, but man, 90 billion just felt a bit aggressive to pay for all that shit. Paramount should pivot to birds. I'm curious now that MYSE did this AI thing after hours, which is absolute craziness. Volume is 20 million shares, really. Like, I'm curious what other companies are going to be next, because I'm pretty sure a lot of companies that are on the verge of bankruptcy saw what Allbirds did today. New Bird AI, are you serious? And they are probably thinking, dude, why don't we do the same shit? Why don't we buy some GPUs? If anything, it gets the stock up. We can probably sell in a couple months, and then if it fails, it fails. But I feel like people would be doing this. Yeah, Allbirds can buy 2 Vera. The worst part is they only raised 50. It's not like they raised $1 billion. They raised 50 million. And by the way, Vera Rubins are out of stock. So are Blackwells. I mean, there's a big wait list. So you think Jensen is going to let a $100 million company get priority access to the most important GPUs on the planet? This is such a joke. Like, it is like, actually, a joke is funny. This is not a joke, because it's not even funny. This is stupid. But it got bid up today. So I wonder what other companies are going to try to do it. Yeah, maybe Nike's next. Just chip it. A bunch of you degens traded MYSE after hours, so congrats. Good trade is good trade. You just don't want to be stuck holding that damn bag. JP Morgan, Jamie Dimon sells 130,000 shares. This is the one bank CEO you can never complain about selling, because he hasn't sold in 20 years. Literally, last year was the first time he sold stock. So this guy does not sell often. So you can't be too upset about it. But, I mean, dude, it was good for holding for 20 years because he held through that 2008 crisis. And look at this stock. In 2008, it was freaking $20. You got to sell at $250 last year and $300 this year and take some profits. Tess says I made 35%, 20%, 30%, 20%, and 45% on MYSE. Tess, you're a day trader. You have become an absolute day trader. But I love it. Look, I've day traded stuff before. There is a thrill. There is an absolute thrill to day trading. It's just, the question is, how sustainable can it be? And it depends on how good of an opportunity you can find. And that does require either some type of system or TA or your own little vibe on where the market's going. It's easier in a bull market because everything's going up, so you can get in, you can get out. But when you find the opportunity, that's what a trader does. They try to take advantage of it. Tess says I'm just having fun. I don't go to the casino every night. MYSE, when Cactus sent that, I couldn't believe it, dude. This stock was worth $185. And the fact that it went public, private social network that doesn't let your messages be read after 10 seconds, that's called Snapchat. They came up with this idea years ago. And then encrypted messages. You're telling me WhatsApp is less encrypted than MYSE's social media network? And I don't even think they're buying GPUs or anything. They're just pivoting to AI by changing their name and maybe trying to change the sentiment of how people think of them as an AI play, but they're not really pivoting to like AI infrastructure at scale. By the way, take a look at this. Tess is going to love this if you didn't hear about this already. One of our representatives bought Quantum. Greg Stiube bought IONQ. This is the first time anyone in Congress bought it. It's only about 15 grand, but he did buy. This was on, it traded March 18th. Wow. IONQ did get a DARPA contract. I wonder if Mr. Congressman William Greg Stiube from Florida, who is a Republican, knew anything about that. I wonder if he did. He definitely did, but there you go. Seeing a lot of sectors a lot more sectors get momentum. Some war updates. Israeli security cabinet meeting ends without decision on Lebanon ceasefire. We haven't heard from Rubio yet because he was in the negotiations with Netanyahu and Lebanon. So it looks like we don't have a deal or an answer on what's happening there. ABC says Vance, Witkoff, and Kushner engaged in communication with Iran throughout the week. Putting the final touches on the agreement will likely take longer. Optimistic about holding another direct meeting between the U.S. and Iranian side soon. A direct meeting between Tehran and Washington is likely to be held before the ceasefire ends. That's another reason the market probably went up today, dude. Yes, there's not a deal, but if ABC's reporting that they've been talking all week, even if they're not there in person, that means they are getting ready to come to some compromise on this nuclear enrichment ban and sanctions relief, which is good because it likely means this is going to be ending soon. And hopefully that just keeps the market going. Do we have a date for the Texas meetup yet? We do not. We still have Singapore and Chicago to go through. And then we'll see if we can get more updates on some other ones. Hoka says, I opened positions on Nebius, CoreWeave, and I ran on March 30th. Absolutely loving it. Wow. Talk about nailing the March 30th. CoreWeave was what? CoreWeave was $67. I mean, March 30th, what if you bought anything on March 30th? It seems like people got the bottom, but some of these obviously have exploded since then, which is good. Waymo went live in Miami and Orlando. The Googs keeps googing. The Goog keeps googing. Isn't Guggenheim, isn't that a place? Or doesn't that mean something? Guggenheim? Why does that word sound so familiar? Solomon Guggenheim. American businessman. It's an art museum. Yeah, but the museum's named after him. Oh, he was an art collector as well. Okay, everyone's saying it's a museum, but it's not just a museum. It's named after a guy. That's where the name comes from, right? But I want to know who's the guy. Gold, silver, copper, and then art collector. The museum is more well known. It's in New York, right? Is the museum in New York? Yeah, it's in New York. I went to MoMA not the other day, like it was like what, 7-8 years ago, Museum of Modern Art. Dude, that was the most boring thing I've ever done. Like, I don't get museums. I don't like, unless it's about an interesting subject. It's like, dude, that's not that exciting. Just walking around looking at shit, can't touch it, can't buy it. You gotta you take that back. It's boring, bro. Who has fun in a museum? Unless it's like a historical thing that the museum's dedicated to, but if it's like an art museum, I don't know. You need to go to the Museum of Natural History. Amid trying to buy priceless artifacts. Dude, art is expensive. Really good art is expensive. Voyager secured a NASA order for their 7th private astronaut ISS mission. This one went public last year. Should we add this to the space list? Is this a big name that people follow? VOYG. They do have a partnership with Palantir as well. Year to date, they're up 7%. Market cap of $2 billion. They secured a NASA contract today. And then JB Hunt had earnings today. We didn't cover that. JB Hunt beat EPS by 3%, up 27% year over year, 149 versus 144. Revenue 3 versus 2.96, beat by 3%, up 4% year over year. That stock is up 14% year to date, JBHT. And so that had some earnings. Yeah, SPY did close above 7,000, or at least SPX. So SPX now year to date is up like what, 1%? No, 2.4. 2.4% is the move that we've made. is the move that we've made. What's your POV on Intel? I think the run has already happened. I just couldn't. I think it can keep going up, but it's 320 billion market cap. It's hard. It's hard to buy it here. TSM earnings is tonight, like 1 a.m. Eastern, if you're going to stay up for it. Roblox agrees to pay 10 million settlement in Nevada for child safety. Roblox also got hit pretty bad. It was at 150. Now it's at 59. That one still down 26%, down for the year. This is even worse than his movie knowledge. Yeah, I do not have really good art knowledge. I mean, I know like Picasso. What artist can I name? Picasso, Michelangelo, Da Vinci. Obviously the Mona Lisa, like I've heard of that. I did not buy Qualcomm yet, no. Dude, I was looking at the growth last night. Qualcomm's growth is abysmal. It's not good. But to Jason's point, this is when you get in, right? But you have to believe that their chips are also going to be more relevant. Because Marvell also kind of sucked for a while before it moved. Rembrandt, Warhol, Van Gogh. Name the Teenage Mutant Ninja Turtles. Michael Burry's a BS artist. Dude, he's got to be mad today. Has he tweeted? He blocked me, so I don't know. He's got to be upset, dude. He doubles down on his short at the bottom. Bought more puts at the freaking bottom, dude. I mean, again, I have no problem with someone who's super bearish and short. It's just he's a snob about it, right? He's just a mean person. And then he charges you $400 to read his shit. Can you pronounce the Louvre correctly? The Louvre? It's the Louvre, right? Let's ask Google how to pronounce L-U-R-V. Louvre. Let's see.
You say it in French. We'll be looking at how to say more interesting and often confusing French names too, so make sure to stay. How do you say it in English? Well, because in French it is said as Louvre. You could say it in English as Louvre. Louvre.
Louvre? Is that how people say it? Louvre?
Louvre, if you cannot pronounce the French R. Louvre from French. Louvre. And now you know. More videos here.
Louvre. I guess. Is this the word of the day? Or we have to do an actual word of the day? Yeah, I definitely cannot pronounce that as correctly. ASTS guy already came on. If you rewind about 30 minutes ago, he was on. And we talked to him early in the show. Jensen was getting angry on the Dwarkish podcast. Go to 110. Okay, good, Nate. Thank you for that, because I haven't watched it yet. I was looking for the best moments, but I have not had time. Go to 110. Okay, let's see. This is Nate giving us a segment here. Let's see what he said.
They also come up with extremely smart algorithms. Remember, what I said. I said that Moore's law is advancing about 25% per year. However, through great computer science, we could still improve algorithm performance by 10x. What I'm saying is great computer science is where the lever is. There is no question. MOE is a great invention. There's no question. All the incredible attention mechanisms reduce the amount of compute. We have got to acknowledge that most of the advances in AI came out of algorithm advances, not just the raw hardware. Now, if most of the advances came from algorithms and computer science and programming, tell me that their army of AI researchers is not their fundamental advantage. And we see it. DeepSeek is not inconsequential advance. And the day that DeepSeek comes out on Huawei first, that is a horrible outcome for our nation.
Why is that? Because I mean, currently you can have a model like
Because
DeepSeek that
DeepSeek-
can run on any accelerator if it's open source. Why would that stop being the case in the future?
Well, suppose it doesn't. Suppose it optimized for Huawei. Suppose it's optimized for their architecture. It would put ours at a disadvantage. You described a situation that I perceived to be good news, that a company developed software, developed an AI model, and it runs best on the American tech stack. I saw that as good news. You set it up as a premise that it was bad news. I'm going to give you the bad news, that AI models around the world are developed and they run best on not American hardware.
Jensen is like, I am trying to go to 10 trillion and you and your stupid podcasts are not covering my company the way it needs to be covered. That's basically what he's saying right here. And I'm sure he's going to go on to say that if Chinese tech was the de facto basis for AI writ large, we'd be screwed, which I agree with. And I'm sympathetic to the bear case about the Chinese getting more technology out. But if they were the de facto substrate by which AI was built upon, we are screwed. And so if it's a better scenario over the other, even though both are not the best, I'd rather have Nvidia sell to China and it at least be American hardware over Chinese.
That is bad news for us.
I guess I just don't see the evidence that there's these huge disparities that would prevent you from switching accelerators. There's American labs, are running their models across all the clouds, across all the different accelerators.
I am the evidence. You take a model that's optimized for Nvidia and you try to run on something else.
But the American labs do that.
And they don't run better. NVIDIA's success is perfect evidence. The fact that AI models are created on our stack runs best on our stack. How is that illogical to understand?
I'm just looking, look, Anthropic's models are run on GPUs, they're run on Trainium, they're run on TPUs.
A lot of work has to go into it to change. But go to the global south, go to the Middle East, coming out of the box, if all of the AI models run best on somebody else's tech stack, you've got to be arguing some ridiculous claim right now that that's a good thing for the United States.
But I guess I don't understand the argument. So like, if say Chinese companies get to the next mythos first, they find that all the security vulnerabilities in American software first, but they can do it on NVIDIA hardware and they ship it to the global south that does it on NVIDIA hardware. Like how is that? How is that good? I mean, they runs on NVIDIA hardware.
It's not good.
Right.
It's not good. So let's not let it happen.
Why do you think it's perfectly fungible that if you didn't ship them compute, it would exactly be replaced by Huawei? They are behind, right? They have worse chips than you.
It's completely, there's evidence right now. Their chip industry is gigantic.
You can just look at the flop or bandwidth or memory comparisons between the H200 and the Huawei 910C. It's like half, third.
They use more of it. They use twice as many.
I guess it seems like your argument is they have all this energy that's ready to go, right? And they need to fill it with chips.
And they're good at manufacturing.
And I'm sure eventually they would be able to just, I'll manufacture everybody, but there's these few critical years.
What is the critical year you're talking about?
These next few years, we've got these models that are going to be able to do all the cyber attacks.
If the critical years, the next critical years is critical, then we have to make sure that all of the world's AI models are built on American tech stack. These critical years.
Okay, how would that prevent, if they're built on American tech stack, how would that prevent them from, if they have more advanced capabilities, from launching the Mythos equivalent cyber attacks on us first?
There's no guarantee either way.
But if you have it earlier, we can prepare for it.
Listen.
Basically, the host is saying, let the American companies have, I don't know, maybe a multi-year or multi-decade advantage to be able to develop the models, find all the security flaws, et cetera. And maybe in the year 2030 or 2035, we give the Chinese the Blackwell, which would be really bad for NVIDIA's growth because, there's a lot of money they could be making off that. And so that time delay gives America the guarantee they will be successful. Jensen's like, if we wait that long, Huawei will come up with their own shit. And because they're coming up with their own shit, they potentially could be better than us, which negates the sort of, or mutes the claim that you're making that these Chinese models aren't superior enough, or China becomes even better than a Blackwell, which then gets really bad because then NVIDIA loses a lot of money if everyone starts buying these Chinese chips. So Jensen's trying to defend why he's still selling to the Chinese today versus the pushback, which is that, if the Chinese become so powerful, they might be better than an Anthropic or an OpenAI.
Why are you causing one layer of the AI industry to lose an entire market so that you could benefit another layer of the AI industry? There's 5 layers, and every single layer has to succeed. The layer that has to succeed most is actually the AI applications. Why are you so fixated on that AI model? That one company? For what reason?
Because those models make possible these incredibly offensive capabilities, and you need compute to
The
run them.
energy, the chips, the ecosystem of AI researchers make it possible.
A few months ago, Jane Street spent about 20,000 GPU hours.
Okay, that was a good 5 to 6 minutes of Jensen legit getting a little upset there. I don't think he's getting upset because he doesn't like the guy. I think he's getting passionate about proving his argument. Also, he has the weight of the global economy on his shoulders. And so, yeah, I would be a little passionate to explain why I should be able to sell chips. Look, I default to Jensen here. I'm not going to try to sound like the smartass that's going to be fear-mongering about the Chinese getting more access to AI. I think you can take a simple stance that it's inevitable that they are going to eventually create powerful models. That inevitability should be mitigated by it happening on American tech versus their own tech, because the beautiful thing about America is that we are the tech center of the world. And China has, many times copied what a lot of America has done, but there's not been massive levels of innovation in China in regards to new things that are out there. It always comes from the US. And so if we let them actually go down that rabbit hole and innovate because we completely exclude them from our technology, maybe there is a worse outcome. Now, I'm an Nvidia shareholder. I'm biased. I think a lot of people are biased, but I don't even think it's about Nvidia. If you own the S&P, it's 8% Nvidia. Like if Nvidia doesn't succeed, one could argue this entire, because look, if Nvidia being able to succeed is why they can invest in Coherent and Nebius and Applied Digital, and they can have partnerships with Broadcom. If Nvidia is not growing the way they're growing, do we want the Chinese version of Nvidia, which I guess this case would be Huawei, to be making investments in American companies? And if a CoreWeave needs a $6.3 billion essentially backstop to be able to sell their GPUs, which is what Nvidia gave them a couple months ago, and if they have to get it from Huawei to sell their Huawei GPUs, which, by the way, I think a Google or a Microsoft, if Huawei comes out with better GPUs than a Blackwell, better GPUs than an MI450, I mean, what choice does a Google or a Microsoft have? Are they going to be artificially restricted to buy Nvidia, AMD, Broadcom chips? No, they're buying them because they're the best. If the Chinese have the best and these companies need to grow revenue and they need the best, who knows if they start funneling all that money? And we should be so grateful that most of our US hyperscalers are not buying those Chinese chips, or that they don't even have the capacity to, because those Chinese companies aren't good enough to make those chips. So I default to Jensen here. Yeah, that line was crazy. I am the evidence. That line was crazy. We got to freaking use that at some point. I am the evidence. That was great. That was Jensen saying, no, it's me. I'm the reason this is working.
There's American labs, are running their models across all the clouds, across all the different
I am the
accelerators.
evidence. You take a model that's
so good. I am the evidence. Is Hood moving? Is Hoodie moving? 89.50. Dude, this Hood run is actually crazy. We were stuck at 60, 65-ish, basically for 2 months. And boom, 90, or very close to 90, like 50 cents away from good old 90. And then, I think 100's kind of inevitable. We get to 90. Like, either this whole run is fake and we lose it all, but it has spent a lot of time in the hundreds. It's not like it's the first time it's going to be getting there. You might have some people that just say, all right, Hood's back. It's time to get in. Yeah, that day that Hood jumped 20%. Yep. This is cool, dude. This is cool. This is a big part of the portfolio. This is something that's been holding down performance for the past 5 months. My mom has Hood. My dad has Hood. My sister has Hood. Like, this is one of those names we all own. It's been ugly. It looks like it's coming back. Yeah, literally, dude, the market always gives you a like, for everyone who felt they missed Hood last year, boom, the war. Like, if you really, really, really wanted Hood, obviously you had to look past the war to then buy and be able to get in, but it gave you a chance. I mean, more often than not, the market, for some reason, will give you a chance. I mean, Oracle at 350, the market gave us a chance at 130. All these SaaS names, Palantir doesn't get dips off in 120. Quantum has been down for 2 months. The market gave a chance. And then it's just a question of picking and choosing which chances you want to take. But Google, 270 to 337. I mean, I know it's everything running here, but everything was also down, which was important. Nate, I showed that clip already in the beginning of the show where Jensen was talking about Tranium and Anthropic. It was a good pod. I think people should if you're an Nvidia shareholder, you should definitely go through it. I'll link it right here. There were hard questions asked, which is good. Sometimes you need to be able to really, get people to explain exactly why it's happening. Yeah, Meta, are we going to 800? It was almost there. Meta was at 798 in July of 2025, right? Meta, yes, 794. So this entire drawdown for Meta, I mean, I don't know if it was euphoric at 794 either. It was getting up there, but they were growing, and they're still growing. They're growing faster than when they were growing then. Yeah, Micron 316. Jason, thanks for the super chat. The greatest thing is that these stocks are still 20% down year to date and 30% down all time. Long way to go. Yeah, Robinhood is still down from 150 to 90. That's a lot. Even if you didn't think it deserves 150, okay, give it 110. 110 to 90 is still an opportunity. Robinhood, 89.30. She's trying to push for it. Nvidia, so we touched it for a little bit, 200.4, and then it gave out. So I imagine a sustainable 200 hopefully is on the way. It's crazy how sensitive Hood is to market cycles. If we are bullish, then Hood should have a great quarter. Yeah, and I think Hood is proving itself to be a proxy. And that's one thing I don't like about it. I want it to detach itself from market cycles, but that requires Vlad growing the other parts of the business rapidly. The good thing about it is when we are in the green, Hood is really green. The bad thing about it is when we are red, Hood is really red. And if you don't want to embrace that volatility, that's understandable. But if you do, if we flip red to green, it can become more rewarding. US to launch tariff refund system on April 20th. I kind of think the tariff refunds are also bullish because that's more money going back to companies, right? They'll be able to potentially hire more employees, spend on more services. Maybe there's a world in which that money kind of stimulates the economy in some way. Now, you might be saying, what's the catch? Well, the catch is that our debt continues to explode because the whole goal of the tariff revenue was to pay down the debt, and we are nowhere near doing that. But I've kind of concluded I don't think we're ever going to pay back the debt. So as long as we all believe that one day the U.S. will pay back its debt, we can get through another couple lifetimes without having to worry about the debt. I legit think that's what we're going to have to navigate with, because I don't know how we pay back this debt. So if the money goes back to the economy, then maybe that's better. Why the refund? Supreme Court, remember? They overturned it. So they are legally obligated now to have to refund it. All right. I think that's it. I think we are done for the day. Congrats to everybody. It's been a hell of a week hell of a 2 weeks since March 30th. The fact that it's mid-April, dude, we're almost in May. We're just moving so freaking fast through the year. And, hopefully this momentum continues. Oh, David Portnoy is talking about Allbirds. Oh my goodness. Please, please, please be careful with this if you're in it. When Davey Day Trade comes back, tends to be a little toppy. Let's see what he said today here.
All right. DDTG exclusive. I just want to make sure I'm understanding this Allbirds story. Allbirds stock is up like 800% today. Now, Allbirds is the company that makes sneakers. You may have or may not have heard of them. They basically went bankrupt. They couldn't sell sneakers, lost like 97% of their net worth. And then they announced, they woke up this morning, rolled out of bed, and like, you know what? We're done with sneakers. We're now an AI company. They have nothing to do with each other as far as I can see. And the stock is up 800%. They went to bed, a sneaker company, a failed sneaker company, and woke up and just screamed out loud, we're an AI company, and they're up 800%. Should I do that with Barstool? Go public and just be like, we're now an AI company? I do not get it.
If he does that, Barstool actually has legit influence. If he does that, like that thing's going up like 2,000% a day. Barstool is a big media brand. If he were to do that, I know Dave's probably thinking, man, if it's that easy, that's actually the top, because Dave can get away with it and make a crap ton of money that day, and he knows he can. That's when we know, okay, this is getting up there. All right, I'm going to that Twitch stream with Thread Guy. Thank everybody for being here. If you guys want to check it out, I'm putting the link right there. And yeah, thank you everybody for joining. We'll have the daily recap out later today. We did 2 days in a row. We're going to get 3 days in a row. Consistency. And we'll be back tomorrow for the market open and see if we can keep this green momentum continuing throughout the rest of the week. Thank you, everybody. Appreciate it. I'll see you guys tomorrow in the market open. Bye, everybody. Have a good one.